dark side of Bitcoin and crypto. Just kidding. That is the title of the Twitter space that we're listening to this morning for the first 20 minutes, guys, or however long they go. Richard Hart has joined a Twitter space with a lot of verified guys, and they're talking about the dark side of Bitcoin. So we're going to go ahead and give that a 20-minute listen before we get into Celsius. Me and Sam are going to do some shilling. Guys, every single day at 11 a.m. Eastern, I'm going to get to this real quick, but I have to remind everyone first, we have the KSBTV golf tournament live in a month and 2 weeks. I'm going to be there on the feet. I've been DMing everyone. It seems like the turnout is going to be insane. If you want to know any more information about that, just DM me and I'll give you all the information. I'll also drop the link below. That's KSBTV/golf. Is it /golf? I just had that link up. I'm so sorry. We had a little switch up last second on how the show was going to go. So I'm so sorry about that. But if you need any more information, I'm going to be doing a Twitter space on it where I can talk to some people that are actually going and just like chit chat and joke around about what a good time we're going to have. So be ready for that Twitter space, guys. I'm going to drop to the song for 1 minute and 9 seconds. When we come back, the Twitter space is going to be up and me and Sam are going to just gab back and forth listening to it while we tweet some stuff out. And then we're going to go on with the show. Hey, special treat. I love these special treats in the morning, guys.
You already know what time it is.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning. Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning. Smoking a blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hex and I'm making a stay. Got me some hedge and I'm making it rain. Pay me some maxi and that's just in case. Jim Ryder sent me to show you the way. Crypto in the morning. 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 Crypto in the morning.
Peter Woolley just stopped being on the, like, people don't know shit about Bitcoin, dude. I've been in this since 2011, mined full Bitcoin blocks of my own solo, and like no one knows what the fuck they're talking about in regards to Bitcoin. It's crazy to me.
I love this.
Go ahead and pull up that browser, Sam.
I think we're gonna have
This one here?
No. So go to the right where your little purple thing is,
so far. 1.3K.
and then click open that so you can see the faces. Just
How do I?
Perfect.
right there.
So yeah, man, just don't interrupt me.
Just the
And
interface
let's
people
kick it
like
off.
Oh, let me go to Richard Hart's thing.
Yeah. So no, for those unaware, I was interrupted like I don't know 4 times.
We had anyone. Hold on, Ryan, you were there. Ryan, just 2 seconds. Ryan, you were there the last. And Joe. And I think it's Rebecca from Magic Eden. Was it Rebecca or I got the name wrong? If I did,
Tiff.
I'm really sorry.
Tiff from Magic
Tiff,
Eden.
That's so
sorry,
funny.
Tiffany.
Jennifer.
My bad, sorry.
But I am Tiffany. Nice to be back.
Tiffany, did I, be honest, Tiffany, Ryan, and Joe, did I interrupt Kirill too much last night? If yes, I don't mind. We had a whole
Yeah, well, I swear, like
100%. Poor KK, I tell you.
Ryan, thank you so much. I really appreciate it. I swear.
Just speaking the truth.
I've been trying to have to like fucking prove this
We
point.
can just
like,
listen
over the
like
whole
this for a
week.
minute.
Like we're just adding people
It's
into
not
calls.
looking at
Like,
anything.
did he interrupt?
Well,
Yes or
just
no?
tweet
No,
anything
yes.
out. You got to
Like,
tweet.
no.
Give it
And
5 or
next
10
one,
minutes.
Yes. Next one, no. It's like I thought I was going crazy.
But all the people we added in the call are people I pay. They're in my company, so they're gonna go on my side anyways. So.
Mario's exactly like Kanye. He's just saying, wait a minute, just a minute, and then he's like, KK, I need you, and then you just interrupt him all the time. So just speaking the truth here.
All right, KK, you got me there, man. The mic is yours, KK. When you're finished talking, just say over, so I know that I can speak, please, man.
No problem, man. Man, you can actually leave the phone in another room and go do some exercise, like jog or something. It's okay, don't worry. Sorry. Anyways, all right. So, welcome all to the 5th episode of our crypto roundtable. today, like just from the start as well, from the start of the conversation, evidently today is going to be a little bit crazy, especially with the Bitcoin maximalist and Bitcoin minimalist debate that we have coming up. And we also have a heck of an agenda whipped up, plus some super interesting panelists that are going to be coming up on stage. So we'll be kicking off shortly with a market analysis segment where we'll essentially have intel dropped on the latest price movements, predictions for BTC and ETH, as well as some info dropped on the latest developments in macroeconomics, so the CPI reports, etc. Today's title for the roundtable is The Dark Side of Bitcoin and Crypto. And that's exactly why we have the market analysis segment followed up by a Bitcoin debate section where panelists will be given the ability to discuss the downsides of Bitcoin. That's one.
And the downsides, the downside, hold on, you forgot downsides of NFTs as well. We're going to go into the,
wash trading,
spaces
money laundering, etc.
Yeah, exactly, yeah.
So this will then be followed by Simon Dixon's Celsius segment, where he'll update us on the latest happening with Celsius and the DeFi meltdown as well. We sort of dove deeper into that throughout episode 4, but because of the constraints of the agenda, we sort of had to cut it short, but we've dedicated a full half an hour for this just so that Simon can explain exactly what's happening. And lastly, we'll have it all rounded up with a trends and opportunities section where we'll be discussing the latest trends and opportunities in the crypto market as well. Now, throughout the segments, we'll be giving away, and Mario, correct me if I'm wrong here, $10,000 worth of crypto and project tokens to a select number of lucky listeners that will stay with us.
So we got $5,000 worth of just USDT and then $5,000 worth of Faith Tribe tokens, which was one of our sponsors a couple of shows ago and one of the projects we work closely with. So Faith, a lot of people love Faith as well. So we thought we'll bring them in, and we'll do that. We'll start giving away project tokens, project we're invested in, not just some shit coins, as part of the giveaways, and maybe some NFTs as well, rather than just pure fiat. But yeah, that's a good intro. And also just remember for everyone that we have a Telegram group now. I'm going to pin the message. So we launched. That's actually fascinating. Do you mind, KK? I'm sorry to interrupt. Really didn't mean to interrupt. I hope it's not. It doesn't offend you in any way. But I wanted to introduce the Telegram group as well for everyone.
Did you pin it? Yeah. Did you pin it or not?
No, I'll pin it in a sec. I've got the tweet ready. But for everyone listening, so what we did, and for anyone that hasn't done their space, one thing you could do, I did it first time on Clubhouse, is create a backdoor, a community where everyone can chat. We did it on Telegram and it just blew up, and we've got 42,000 members in 2 weeks. We did a fireside chat, there's like 5,000 active members there. So we're going to pin the chat in the Telegram. To win, to be part of the $10,000 in giveaways, you have to join the Telegram as well. It's one of the requirements. And we're going to also announce Discord. So we have a lot of people waiting for Discord. We're going to announce Discord. They're going to be giveaways on Discord as well. So I'm going to be pinning a link right now for everyone listening. And if you go there, you go to the Telegram group, Discord group. You can ask questions, debate, and we're going to have a lot of heated discussions. Don't hesitate to participate in those discussions. We're going to be reading your questions and seeing your perspectives as well as the
Okay,
audience.
guys, we are just going to be going on this another 5 or 10 minutes. Just
I think
to
that's
keep a little vibe on
the
it.
heated discussions as well.
We're just
The
gonna
best
see what
thing
it's all
that we
about.
could
Tell
do
us
is
how
just
the
keep it
audio is.
constructive.
I'm going to drop the link below,
relevant
guys.
above all, other than
Please
just
share
a
this
bunch of
on
panelists just shouting
Twitter.
at each other. Because I don't think it's going to be a good experience for the audience itself. But as I was mentioning, so throughout the segments, we'll be giving away $10K worth of crypto and project tokens to a select number of lucky listeners that stay with us from the beginning till the end. As always, our team is basically scouring the listener notes and making sure that the people that are there are eligible, so they followed all the links and they're with us from the beginning till the end. So basically, it's going to suck big time if we listed you as a winner and you're not there to claim the prize, because we'll just have to choose someone else. To participate, you also have to join all the links that Mario's pinning above, which he hasn't pinned yet, but I think he's on it. As per the roundtable, the past 4 weeks have been a major success, with all 4 episodes being listened to by approximately 150,000 people, if I'm not mistaken, so give or take. Last week's episode was on Solana versus Ethereum, and that episode alone had 40K people tuned in. We had some super valuable conversations with thought leaders from both sides on whether Solana is better than Ethereum from a blockchain and community perspective. You can find that episode on Mario's profile. Today, though, we're switching things up with key points of focus being Bitcoin, an NFT hour, Celsius, and more. And we've got some special guests with us today, including Richard Hart, who was a former Bitcoin maximalist / evangelist, but then went ahead to create his own coin, or coins, if I should say, especially with Pulse being released right now. Then we also have Simon Dixon joining us, who's actively helping Celsius with their recovery plan, and a couple of others, which I'll announce along the way. And we've got some nice questions lined up for them throughout the duration of the show as well. And for the roundtable, for those unaware, again, probably the last time I say this, it was the biggest room on Clubhouse during Clubhouse's inception. Mario, our host, had tens of thousands of listeners in each room and was hosting rooms alongside some of the world's biggest celebrities and thought leaders, including Paris Hilton, Jay Shetty, and others. But after taking a short break to get NFT tech listed on the Canadian and European stock market, we're finally back, and we decided to move the show onto Twitter Spaces instead. For those who don't know me, I'm a growth hacker, which is basically a fancy term for a marketer, and a bit of a crypto and Web3 enthusiast, and I'll be co-hosting episode 5 alongside Mario. As mentioned before, giveaway prizes, etc. Now, major shout out to the sponsor of this space, NFT Tech. I think Mario can expand on NFT Tech more, as he was the actual co-founder of the company itself.
Yeah, I will in a second. Also, I've got Andy. I want to introduce Andy to the audience. Came in last minute. Really glad you managed to come in, Andy, especially with your involvement with the recent, DeFi liquidations and your insight there. So we didn't have you on the guest list because I thought you won't be able to join. But thanks a lot for joining, man. I appreciate it.
Andy, are you with us?
There? Can you hear me? Okay, God love her. He's there. He heard us.
Yes, I'm
Thanks,
around.
Andy.
Thanks,
I
Mario.
appreciate being here. Yeah, so NFT Tech, everyone, is the sponsor. It's listed on the Canadian and European stock market. I co-founded the company and was the CEO for a period of time until it went public. And it's essentially like a portfolio company. So any retail investor could buy shares in NFT Tech to have exposure to the space. And one of the few companies doing this for NFTs. We've got a lot of index funds for Bitcoin, for ETH. But not many people have done this yet for NFTs. So that's what NFT Tech did. We launched it about a year and a half ago. But enough about NFT Tech, man. Let's kick it off with the market analysis, KK. Then we'll introduce the guests and we'll start digging into the topic.
Perfect, 100%. Romy, in the meantime, just make sure that you're adding the relevant people for this segment of the show, just so that we can kick it off. And yeah, I guess we'll basically hop into the market analysis segment of the show. So a quick wrap up of just what's happening right now for those unaware. Bitcoin has been steadily forming lower lows and lower highs throughout the entirety of this week. The price seems to be slowly decreasing to retest the demand zone at 18K after a short-term rally towards the 21K mark. Ethereum, on the other hand, has dropped to its 1K levels, with the support of 1,000 being the critical part over the last few days. On a macro scale of things, the euro-dollar pair has broken parity, with euro-USD reaching 1.01 yesterday, and the US has released a CPI of 9.1% for June, which is basically the highest rate in 41 years, causing the stock market to fall. Now, as you all know, when stocks drop, people don't hedge with crypto, despite what we'd like it to be. So crypto falls too. And this is basically contributing to the bleed off we're seeing right now in the market. I'd love to get the thoughts of the panelists, though, with regards to just what's happening from a market perspective.
We'll kick it off with Joe. Joe, I know you did a market analysis last time. You want to kick it off for this show?
Yeah, definitely. First, thanks Mario and KK for inviting me here. Enjoyed it last time. I'll do, a quick market analysis and then got to drop for other calls. But two major topics that I wanted to cover this time around. First one is, and it's very fitting with the title of the space, the dark side of Bitcoin and crypto. Many people, I think, view Bitcoin's and crypto's volatility as, something that scares them, and it's, a bug of the system. I like to argue that Bitcoin's volatility is a feature, not a bug. And so I kind of come to the conclusion that these extreme bull and bear markets of Bitcoin are a feature and they speed up the adoption process. So, the average person doesn't know this or may not be aware, but, the 2017 Bitcoin bubble and the 2021 Bitcoin bubble that we had were not the first time we saw this significant price rise and rapid decline. There have been countless other bubbles. In 2011, it rose from $1 to $30, crashed 92% back to $2. In 2012 and 2013, it rose from $2 up to $250, crashed to $62, which is a 75% decline. 2013, 2014, it rose from 62 to over 1,000, dropped back to 154, which is an 86% decline. So, like I said, these massive price advances, along with the massive declines, are exactly how I think Bitcoin adoption will continue to play out. The bull markets bring in the network effects, including technology development, investment, ICE, fidelity, and security for miners. The bear market drives out all of those who really don't understand what Bitcoin is. So they, sell it and deeply regret it later. And I think this exact cycle is kind of going to repeat itself until weak hands are purged. People that, don't understand Bitcoin, or maybe they were too leveraged going into a bear market. And I think the only people remaining, after Bitcoin falls 80%, are really those comfortable holding Bitcoin. And I think the only ones left buying after it has fallen 80% are those well capitalized and have strong balance sheets.
No shit.
And they're in it for the long run. So that's my general take on why I think that Bitcoin.
The people that are broke are going to
Volatility
sell
is
their
actually a
shit.
feature and not a bug, and it's speeding up the adoption process. Second major point that I wanted to make for this market analysis section is the whole debate on whether Bitcoin is an inflation hedge or a debasement hedge. So many people have kind of said that Bitcoin has failed as an inflation hedge. We just had a record CPI reading this week. It came in at 9.1%. Which was, a 40-year high. But meanwhile, Bitcoin is down significantly from its all-time high of 69,000. And in my opinion, I think a better way to describe Bitcoin is it's a monetary debasement hedge rather than an inflation hedge. So I think, CPI is a backward-looking metric. It describes what consumer prices have done, over the past 12 months. However, I think markets are forward-looking metrics. Markets are trying to measure what's going to happen in the future. And so in this case, Bitcoin certainly has held its narrative as its monetary debasement or inflation hedge because, we've had massive government stimulus, massive Federal Reserve easing, which occurred in 2020 and 2021. Bitcoin benefited greatly during those times. And now that the monetary stimulus is clearly being reflected in consumer prices, it took some time for that to manifest, as businesses don't all immediately raise their prices at once. And since 2021, Bitcoin has fallen because the Fed has clearly said that they're turning off their easy money policies in an attempt to slow this inflation that took time to manifest. And since the Bitcoin market and the US equities market is forward looking, the market is pricing in an aggressive hawkish Fed. And so to sum it up, I think CPI, it looks backward and Bitcoin and equity markets look forward. And whenever the Fed inevitably reverses course and tries to stimulate once again, I think Bitcoin will be one of the best assets to own.
Joe, for the audience, could you explain the difference between a debasement hedge and an inflation hedge as well?
Yeah, absolutely. So
Richard
kind of
Hart
like I was
rip
mentioning,
these guys
in
into.
2020, we saw the Federal Reserve
Give
and
them the mic.
U.S. Central government get really aggressive, pushing out stimulus checks.
Hopefully, we
dropping
hear some
interest
new
rates
content,
to
not just the
zero,
same old
doing
thing over
massive
and over again.
quantitative easing. We saw that occur back in 2020 and 2021.
10
Like
more
I said,
minutes.
markets,
If they don't
whether
get
it's
hot,
the U.S. equity
I'm
market,
out.
stocks, or the Bitcoin market or the crypto market, markets are forward-looking. So when that occurred, that debasement of the dollar occurred back in 2020 and 2021. That's when Bitcoin started to, look forward to see this. Hey, inflation is coming. Like this debasement is happening now. Let's price that into the Bitcoin market, into the U.S. equity market. So Bitcoin had that fantastic run up, throughout 2020 and 2021. It went from its $3,000 or 3,000s low in March 2020 up to 69,000 at the end of 2021. But then we had this inflation manifest, which now we're potentially seeing, or we're seeing record highs of it. But since the end of 2021, the Fed has kind of reversed course and they have taken a much more hawkish stance, meaning they're raising interest rates and they're starting quantitative tightening. So, like I said, the market is forward looking. The Fed is trying to tackle inflation aggressively now, and that's really what's been bringing down asset prices.
Can you also, because I know that recently a topic of conversation has been how CPI is measured, so how consumer price index is basically measured. Can you expand on that? And can you also expand on whether you think it could be measured better? Because I remember hearing a snippet on a YouTube video about employees of the government basically going to shops with a tablet and just identifying the prices and
Is there
working out.
any way they could do it a
Can
little
you talk
better,
about
you
that a
think,
bit as well?
maybe?
Yeah,
Or are they
sure.
just going to scam
So yeah,
everyone
there's definitely
forever?
a lot of debate on how to accurately measure consumer prices, and I think Michael Saylor has a great quote on this. Inflation is a vector. It's not something that you can just boil down to one number. It kind of depends on everyone individually, what they buy, where they live, where they buy or rent their house, what foods they consume. And so if you're consuming different food, goods and services compared to other people, you might be experiencing a different inflation rate. So I think at the end of the day, it kind of comes down to the government or the Federal Reserve is trying to, I guess, identify that inflation number in a very concise manner, but it's honestly just impossible to do, in my opinion. And I think, in the long run, when with technology growth and processes getting better, population growing, more division of labor, I think, we really should see prices coming down, right? Like things should be getting more efficient. Food should be getting cheaper. Like if we have self-driving cars, or self-driving trucks, then we should be able to see goods and services delivered to us in a more cheaper manner. And in the long run, prices should actually be coming down. So it's kind of this interesting division where the monetary system that we have today is focused on pushing prices slowly up over time, but we have this technology deflation, which is just market reality, which should actually be pushing prices down over time. And I think we're kind of seeing this unique division and two forces pushing in the opposite direction, and it's causing a lot of problems.
Mario, do you have anything to add to this? Also, another one for the panel,
so,
and I'll add it later. Go ahead.
No, I was just gonna say get different perspectives on this as well. So I know like Andy, Richard, you guys, and Ryan, you guys have been in the space for a long time, and would love your take on. Do you see things differently this time, or is it just another correction and just a matter of time before we see the market recover?
I think this is just another correction. I mean, anyone who's been investing for any period of time just knows that there's cycles, and this is just another one. The world's not going to end. Everything's gonna be fine if you're holding good assets, right? Like the reason why I particularly hold ETH versus Bitcoin, and again, I'm not an ETH maxi, is just because everybody that I know in the space that's building builders just don't understand the utility of Bitcoin other than land, an asset that you hold that will go up. ETH and Ethereum is obviously what you build on. So that's why I've always focused on Ethereum and ETH. But this is just a cycle, is my opinion. Like obviously not financial advice, but the underlying asset is good, and everybody should do the cash flow analysis on the Ethereum blockchain itself. Like it actually generates cash post merge. So this is a good foundation to build on. So I believe I'm the same with NFTs. Like good NFTs are gonna hold their value and grow. You buy ETH at 1,000, you buy a good project that's an NFT. ETH will appreciate over time. The project will appreciate over time, and if you're patient, it should work out. Now, there's a lot of low quality assets out there, and I think those won't recover. But I'm just going to be patient.
Celsius.
Does anyone disagree with the? We've said this before. Like
it's getting a little better.
Projects are here to stay. Projects with a strong community are here to stay. Does anyone disagree?
I
with
disagree.
That
Yeah, I disagree entirely. So,
yeah.
Ethereum benefits like
internally. So the more developers that develop on Ethereum, the more projects that use it, the more it acts as a base liquidity layer for Uniswap or Sushi or whatever. The more rare the Ethereum coins get, and the larger the float of, like, all these projects need to have some of the ETH to do the stuff they want to do, and so it creates a float. So even if they don't want to necessarily be speculating in it, they still need to have it. And that all increases demand. And so, like, when you bring on new projects to Ethereum, it doesn't create as strong a substitute good. But with NFTs, the substitute goods are just more strict. So, you know, you buy one monkey picture, someone else makes a toxic monkey picture, and then someone makes a monkey picture GAN, and then it's very hard to see how someone else's monkey picture pumping in price actually should affect your monkey picture's price. And so I think it's a lot easier to dilute the monkey picture market with more pictures than it is to be like, oh, like, we'll just make another ETH. I think it's a lot harder. I know it's a lot harder because I'm making another ETH. So,
well, but Richard, you're sort of classifying all NFTs as monkey pictures. You obviously don't believe that, right?
Yeah, I do. What are the monkey picture ones?
Then you need to research NFT market. I mean,
no,
NFTs,
you can just teach me now. I'm ready.
Okay,
I
NFTs are
kind of
technology,
agree with the guy a little
right?
bit.
They're
well,
not a JPEG. So you got to look at what the technology
Completely
can do.
agree with
They're
you.
tokenized assets.
But Richard,
So you're
Richard,
going
I'll
to try
go
and
to the
you're going to
concept-
try and
the
defend
concept
you're going
of
to try and
digital-
defend monkey pictures with ERC 721
No,
and its
no, I don't-
actual
I don't-
utility
I don't
that no one
own-
uses.
I don't own any Yuga assets, so no, I'm not defending monkey pictures. What I'm
I'm
talking about is 721.
So let's be serious that in actuality, apart from the technological argument, they really are just fake gambling. It's just fake gambling. You guys are buying loot crates. You're buying gun skins in Counter-Strike and hoping the price pumps with maybe less counterparty risk. Maybe.
No, well, you're conflating the technology with what people are doing with it now.
It's
like
just
those
adoption,
are two separate
just like
things.
ERC20.
Yeah, but people are but people aren't buying your future optional fantasy reality that you think will happen one day. They're buying monkey pictures now. So you're just dreaming shit. Like, people are getting wrecked now, and you're saying it's okay they're getting wrecked now because it'll be okay later somehow. Like, no, it's not okay.
I didn't say it was okay now. I said people
It's
need
not
to buy,
okay.
like, being
Yeah,
buy
so
good
Richard,
projects.
I have a question for you. The concept of digital ownership, the ability to own something virtually without a central entity saying you own it, as a technology, do you not see value in that technology?
You guys understand that that's not what NFTs are? Let me explain to you guys what NFTs are. An NFT is a serial number loosely related to a JPEG, which may or may not still be hosted on the internet, and at any time can be swapped to dick pics, unless you use IPFS, and that's it. And most projects don't even do that. So you know, you're not even buying the intellectual property. You don't have the rights. And I, by the way, am putting the F in NFT because when I fork Ethereum, all of your NFTs are coming as well. And so you think they're non-fungible, but I'm making them fungible because I'm giving you another copy on a new chain. So how's your fungibility doing? So it's weird that I'm like down talking my own bag, like hurting my own business by like alienating the NFT guys by just saying like, hey guys, I'm making your shit fungible. So, you know, if you buy an NFT in the future, I hope you're getting the Pulse Chain copy too, because it's going to suck for you to have to argue with the seller when he sells you the ETH copy and he sells somebody else the Pulse Chain copy. I would want both my copies. And I mean, like, NFT guys don't like getting robbed by fees either.
Richard, you're building another version of Ethereum? Like, what are you talking about?
It's already done. It's already done.
No one knows about it or uses it.
Oh, right. Yeah. But it raised $1 billion. That's how smart you are. That's how smart you are, dude. It raised $1 billion with a B. There was $680 million of stable coins sitting in the 2 sacrifice addresses. So tell me how smart you are and how up to date you are. I raised $27 million for charity. Did you know that? You probably didn't because you actually don't know much.
So Richard, I know you're referring to Hex, yeah?
No, absolutely not. This has nothing to do with Hex at all. So you guys are you guys crazy? Holy shit. So go to pulsechain.com, go into MetaMask, put the settings in there and go fuck around with all your free coins. They're all sitting there. All of your coins that you have Ethereum are already sitting in the testnet. You can go trade them. And people have been trading them back and forth and having fun on the testnet for like 6 months or longer. And we would already be in mainnet, except my devs found some denial of service attacks they want to close up. We could launch without doing that and just hope no one attacks, but I don't feel like going down all the time like Solana. I'd rather stay up all the time like Hex. So I'm not, I don't want to, like, I hate alienating all the NFT guys because I'm giving you a free copy of all your shit on a new chain with no AML, no KYC, no sign up. It all just fucking works. But I still think overpaying for serial numbers loosely related JPEGs is stupid.
No, but I think
And the technological argument that one day you could use it to secure other shit is retarded. No one cares right now.
Yeah, but no one cares right now. I think that the technological benefits of NFTs go way beyond looking at.
I'm glad we
JPEG
stayed on,
pictures of
boys.
monkeys. You know,
I'm
I've been
glad we
against.
stayed on. That was hot
I was
and
against
heavy,
monkeys at a
guys.
stupid time.
He mentioned all his products.
Punks and apes and ignored the
And most of the people
value
had no
building
idea.
Community around it, but then
Well, they
even
know.
you know, I see
they
value
were just
in those
pulling shit on him.
PFPs.
Well, they
Do you
know
see value in
of
having
it, but they
digital
just were trying to
identity
belittle him a
represented
little
by
bit
one of
because he
those
was getting too
NFTs?
feisty, which is fair.
No, it's
Assuming
horrible.
The NFT. Why is it
They're
horrible?
probably also very
Because
popular.
like you don't even own the fucking property rights.
I'm
Like
gonna
the
go ahead and
actual
look through these
property
guys'
right owner could
articles.
come and file a fucking claim against you and remove your stupid NFT from you that you think you kind of maybe own, but you really don't. You're pretending you own it. You have no fucking rights to it. You don't actually own shit. You're just pretending that you do. And you get mad when other people copy paste your shit and pretend with you. We have real
Well, that
ownership of
depends.
things. I really own the Hex logo. Like, well, a company really owns it, but like it's really owned. It's not fantasy shit where you get rug pulled and they just point the server somewhere else. They can just take your JPEGs that you think you own and point them to dick pics, and you could cry about it. It's the stupidest shit I've ever seen.
I'd be happy to have a conversation without swearing and kind of
Oh my God.
inflaming this
No,
whole thing.
Oh my
This-
God, dude.
This doesn't feel like a professional
Can you explain to me what's wrong
conversation.
with cursing? Like, are you a school kid? Are you in elementary school, buddy?
Richard, I would agree. Like when we brought you on stage, and I've been watching you since the early days, and you know, you've got an incredible audience. But there's a lot of people that get alienated by the confrontational nature of presenting a point.
Yeah, but you guys are
so
costing
while-
people their life savings, and you think it's funny. Like,
We've never shilled a project before. We never will shill a project. Now I know there are people in this space that pointing them out and pointing out the imperfections of the space is the purpose of the show today. And we had a list of things that are wrong with NFTs. But there's, you know, so just to kind of differentiate ourselves from the people that pump projects. I've never shilled a project. I know Ryan hasn't either, and he's invested a lot in the space. But I also get your point, and looking at, you know,
I'll curse less, but if you're telling people, if you're overcharging people for serial numbers related to JPEGs, I don't like it. And I'm gonna give everyone a copy of your stuff for free, so enjoy.
So Ryan, what would be your take on Richard's point regarding his concerns with NFTs as a technology?
I honestly need to research the technology he's talking about. I haven't heard of it till today, so I need time to do that to have an intelligent response. But this doesn't feel. I don't feel like I'm talking to someone who is open-minded, so I'm not going to engage anymore.
Right, cool. Well, Richard, I think this is a discussion that's worth having and preparing.
That's
for
called
maybe
getting
in the future.
shit
So
on.
would you be up to going on a different space
Where I'm
where we
from.
discuss that exact
He
concern
said,
that
I don't
you
have a
made?
response for that, so I'm just going to listen.
And then we bring in some people deep in the NFT space, some heavy investors in the space to go through that, through those points. Richard, you up for that? Richard, you there? You don't have to curse, but you can unmute if you want to answer.
Oh, I was muted. Nice.
Yeah.
Hey, I think that other guy is a coward. I don't know why he's such a baby. And yes, I'm happy to debate anybody.
Cool. Okay, do you want to go through the agenda, man? That took a massive.
Yeah, let's go.
curveball.
Get the next
We're
one.
going to kick him off.
We're just supposed to have NFT hour, and like Magic Eden just bailed as well because of the conversation. That's crazy.
Hey, welcome to the internet, guys. We got thick skin here.
We've got 2,800 people, no, 2,750 people listening to the space. I mean, it's our biggest space yet. So obviously the audience.
Why do you
enjoying
think,
the
guys?
discussion.
Why do you think it's the biggest
So
space?
for the
One's in the
audience
chat
members,
if you
I'd love
think
different
Richard Hart's the
perspectives on
reason the
this. We have
space is the largest
Telegram
this
and the
time.
Discord groups pinned
One's in the
in the
chat.
space at the top. So
And a
go in there.
bicep in the
Anyone that
chat,
wants to
why not?
debate the points made by Richard, welcome to bring you up. We have Tony Wood joining later on as well to discuss a few points as well. And Richard, I think you'd have a strong opinion on those points. But yeah, so while everyone's doing this, okay, let's get through the agenda, man.
Are you ready for are you ready for NFT hour?
No, man. I think we'll go through directly to Bitcoin first, and then we can talk about NFT hour later, because I think all the NFT guys just kind of freaked out.
Magic
we'll go
Eden
off for NFT hour. Let's see what they have to
poof.
say about
It's
Bitcoin.
like, what the fuck? I was expecting them to, like, I don't know, like debate or something.
Yeah, Tiffany will join back.
This is pretty interesting, actually.
I'll let you go on with the agenda. And for everyone listening, just remember, make sure you follow all the
You can do
speakers.
shows
We've
with
got
while you're just
2,700
listening.
people.
They're
We should
really
get 40,
and it's
50,000
helpful because
listeners
we
per
can
show,
conjecture right
including
after.
replay. So make sure you follow the speakers. You join the Telegram and the Discord community to be part of the giveaways. And if you have any questions, any points you make, if you want to go up and speak as well, definitely let us know in the group. We've got the team watching the Discord and Telegram groups. Again, check the pinned tweet at the top of the space to join. There's a link there. But let's go through the first point, KK, in the agenda.
You want to flip it from NFT hour to the Bitcoin debate, or how do you want to run it?
Yeah, we'll go to the Bitcoin debate, and then we'll get some NFT guys to come in and get a debate going.
Or do you want to protect NFTs? You choose.
No. We'll talk about NFTs afterwards. We'll kick it off with Bitcoin and crypto.
I would love the Bitcoin thing, man, because like the NFT dudes just they don't want to hear what I got to say, bro. The Bitcoin.
Well, Richard, apart from the tech, and I know that tech is the fucking fundamental part of it, because if the tech doesn't work, then everything goes to shit. But because I'm not a blockchain dev.
That's how you get 140 followers in 8 minutes, guys.
You don't believe in any of the
marketing
applications
works.
at all, even if the tech was,
So
fully functional.
I can explain it to you. Like, I love to educate, so I can explain this like really clearly. When people create NFT, blockchains are just really expensive, really slow databases. That's all they are. Period. They're the most expensive, slowest, crappiest databases in the world. They have hidden bit rot. There's a fork that just removes your data. You have to run your own computer offline to make sure that your data is still there, because it might have been orphaned off in a fork. When you try and write to the database, sometimes it doesn't go through because the blocks are full, or sometimes it doesn't go through because your transaction got dropped, or sometimes it doesn't go through because you didn't bid for enough gas. And so it's actually a horrible, terrible nightmare for doing any type of development. The only reason that we endure any of this pain and horror to develop on these platforms of the world's slowest and most expensive databases is for censorship resistance. And so NFT projects run into a problem. And the problem is they want to issue people JPEGs. And JPEGs take X number of bytes. And if they add up the size of all their procedurally generated garbage art and add it all up, you end up with like maybe a gig of data. And then if you see what it costs to write a gig of data to the blockchain, you can't afford to do it. It costs too much. You'd go cash negative. And so what they do instead is they take the JPEGs and they store them offline in a normal web server. And then they store a hash of the JPEG on the blockchain because it's much smaller.
But you're happy about the tech, but you got IPFS as a solution, you got other solutions.
Yeah, I know.
Developed.
Yeah, sure. Right. That barely anyone uses, but they should use because it is better.
Can you explain IPFS to the audience?
Yeah, so what
otherwise we're just throwing
yeah,
shit
so
on
all IPFS is a web server, but it's based on the hash of what's being stored. So a hash is just a way to identify something. And then so like you take all the numbers that make up the picture and you run them through this code, and then you get a new number that's a lot smaller. So it's like looking at a book. You look at the book and you're like, okay, I'm going to call this book the Bible. And then like that's the hash of that book. And then I mean, it's not the best example because there's different translations and but basically you can identify a big set of data by a much smaller set of data. It's just a name for it, right? But the name doesn't have collisions. So like it's a unique name that it will always equal that thing. So anyway, so IPFS is just a way to store data on a web server, but access it by the hash of what it is so that you know what you're pulling up is really the thing that you wanted. So it's like kind of perfectly built for NFTs, basically. And so for projects that use IPFS, at least there's a chance that what you think is yours really still is hosted on the internet somewhere. But with these projects that have centralized servers, they can make your NFTs whatever they want by just changing the thing on the server. Because you have some serial number that lives on the blockchain, and then their server lets you think it equals some JPEG, but they could just change that data and it could equal some other JPEG whenever they want. And that's not trustless and that's not crypto. So for NFT projects that actually use IPFS, that's kind of crypto, right? It's harder for a middleman to come in there and just steal all your stuff. But these projects that don't use IPFS, they could just steal all your stuff. They could just give it to somebody else. They could hold it for ransom. They could be like, hey.
Correct.
Yeah, but Richard,
I agree with
hold
you.
on.
I think this is. Go ahead, man.
I wanted to say, what about on-chain? Like on-chain solves
Well, there's
that
not enough
problem.
space. You can't
I'm
because there's
saying,
not
but
enough space.
on-chain
The
for
blockchain
instance,
is not big enough to store all the JPEGs. It can't. It just fills
all I'm
up.
saying is on-chain monkeys. Let's say if we take on-chain monkeys, they're the perfect example of the shit is legit. I mean, like, there's no argument there.
Well, no, the argument is so you have reduced your counterparty risk, but now you still have, we're really just playing roulette, but instead of numbers on a wheel, we have monkey pictures. Like, it's just obfuscated gambling. There's no actual
It's just
technical
less
innovation.
efficient is what he's saying.
It's pure. It's just greater full. So like Bitcoin's technical innovation was that it was the first peer-to-peer censorship-resistant kind of attempt at digital cash, and it failed at that, but ended up being digital gold, and that was worth more. So yay. And then Ethereum was like, we're going to do the same thing Bitcoin did, but instead of just using the Bitcoin opcodes, you're going to be able to do turn complete stuff and do a lot more computation. And that opened up the floodgates of creativity. So now you've got options, you've got time deposits, you've got peer-to-peer trading, DEXs, everything. Like, that opened up the sky's the limit. And then when they opened up that Pandora's box, it released a lot of bad things, right? So you have a million rug pulls now. And it, maybe released a lot of good things. We'll see what gets up after the bear market, right? Everything pumps in the bear market. Trash pumps, scams pump. And then the bear market comes. I meant to say bull if I didn't. So during the bull market, everything pumps. And then during the bear market, everything dumps. And I do mean everything. And then it's like, what will get back up? And some things won't get back up. Like Luna's not going to get back up. But like probably Dogecoin would. So even though Dogecoin's down like, I don't know, 85% or something, it probably will get back up because it's done it for so many years. So even though it's not good technology, it has product market fit. It has a little bit of a walled garden due to its memes. And then that's enough to get back up. It doesn't have critical technical failures. But there's a lot of things that do have critical technical failures. So just because, just because IPFS solves counterparty risk, it doesn't solve this was a bad idea and overpriced in the first place kind of bubble risk. So bubble risk is different from counterparty risk.
Richard, other than the expensive apes and just the pictures and everything, if we talk about alternative NFT applications, like I'll just choose one random from the top of my head, like a access to a certain community, for instance.
Yeah, they're all great. I think those are all fabulous, but no one's using them for that. So in a world where you're tokenizing access and shit, it's fabulous. But like, you don't have to overpay for access. You don't have to overpay for serial numbers loosely related to pictures. Like the price is the main issue, and that's why most people are in crypto. If these NFTs didn't have prices and weren't easily tradable, no one would buy them. It's pseudo gambling.
I actually agree with Richard on this one. On the aspect of I don't fully have an understanding of the tech, but with regards to alternative use cases such as like community access and that type of stuff, where it's more down to earth from a pricing perspective.
Community access is actually just even that is boring. Sorry to interrupt. I was going to say even you've got so many applications of NFT as a technology, and I think Richard, what you're saying, like if you're using NFTs to tokenize your medical records.
Well, I can give you a perfect example of a good use of an NFT, like right now. So if you use Uniswap V3 and you open a liquidity provider position, you are issued an NFT that represents your liquidity provider position. And it even comes with a funny picture. And so all of your liquidity positions in Uniswap V3 are NFTs. That's fine. That's wonderful. I have no problem with that. Someone else tokenized hex stakes and made them, one level of abstraction larger so they act like bonds. And those are NFTs. And so like there are layer 2 technical ways to use NFTs that have nothing to do with JPEGs that are, fine.
So perfect. So you look at the current state of the NFT market, unsustainable, Ponzi-nomic schemes, a lot of scams. But as a technology, if it's used properly, there's a lot of great utilities there.
You agree?
Man,
yes, I agree with that.
Your point. I'm going to let Andy speak because I'm glad he's here as well. So Andy, before I give you the mic, I just want to say, Richard, like you've got a very unique way of making your points. They're good points. Like when you start digging through it, you get to a good point. Usually we agree, but your way of making those points, man, you rub a lot of people the wrong way. But
I'm like the Kool-Aid guy that comes through the wall. It's the Kool-Aid still tastes good.
Andy, the mic is yours, man.
No, I think Richard is being very direct. You know, I echo to some of his comments on you know, the actual usage of a blockchain, and whether there's a real need to have a business case, you know, using using blockchain or building on blockchain. Because I give advice to governments, I give advice to listed companies. I realize the biggest problem is everybody is just here for the fact, you know, just for the fun of it, right? And they do not really know exactly, you know, the kind of cost that is behind it. You know, taking another step backwards, you know, I have friends, you know, who say that, oh, you know, STO, for example, securities token are the best thing, you know, because there's no need to go through the middleman. It's a lot cheaper. There's no need to go through the audit. But again, these are all bullshit, because there are other costs incurred, you know, for you to be listed on an exchange, and it's not too much cheaper, you know, as compared to a real standard, you know, traditional listing, right? So I think that I agree with Richard. But one thing that I do not really agree with Richard is uh, maybe I should put it this way. Yeah, I agree with him that there's a lot of PFP or JPEGs that are in the space right now who are here for maybe some rug pull or some form of scams and so forth. It is a pain in the ass, and it is cheating a lot of people's money. You know, not only us as a crypto native, you know, also all these new people, you know, who think that, you know, it's easy money, right? So all these PFP guys, all those profile picture guys, I think we have to really educate people that, you know, some of these things you just buy it because it looks nice, and do not really take this as a gamble, or maybe you want to speculate, or you listen to your friends saying that, oh, it's going to be 100x the next day. All these things we got to educate, and then we have to tell them that there's a lot of hard work, you know, in order for a profile picture to be a half a mil or 500,000 worth, you know. So we really need the education part. But I do not agree
I
on
give you a
one
funny
thing.
joke. I'll tell you a funny joke. If the NFT guys want to clap back at the crypto guys, just tell them, hey, Bitcoin dropped 72%, Ethereum dropped 83%, and Hex dropped 93%. So, you know, maybe the monkey picture didn't even drop that much. I don't know. It's hard to tell.
No, but that goes on to another joke. One of my friend went for I call it a scamina. So those guys went to offline scamina, talking about investing in crypto and NFTs. You know, they were saying that since Bitcoin has dropped that much, you know, there's a very high chance that it's going to bounce back the next month. You know, and then the kind of APY that they are giving them as an example is so huge that I when I saw the PowerPoint slides, I really think that it is so naive. But the sad part is there are people who really put in the money right on the spot, you know, to those guys. So those are real upright scams, really doing a lot of scammy work. But I saw their contract, you know, the offline contract. It is very much foolproof, because whatever that they are paying, they actually get a certain goods in return, which is the shitty NFT, right? So that's another story. But I want to talk to Richard about this. You know, when you talk about the multiple chain and so forth, you can just replicate that. But if you are holding on to maybe a punk, for example, right? I agree with you about the copyrights and so forth and so on. But having it copied on another chain, on another string of data, or another string of hash that's being tagged to it, it does not mean that they are the original one, right? So
Well, it might not
if
be.
that,
I mean, like, so this in the event, so the scammy stuff that is really full counterparty risk, where some guy controls a server and you beg him to like not change the JPEG. If they support the new chain, cool, you got stuff for free on a new chain. If they don't support the new chain, you don't. The real ones, like the IPFS ones that are more trustless, if the data on the chain is what mattered and the chain state was literally bit for bit copied, then, you know, now the question is an issue of liquidity. It's an issue of what is the market for you know, like, and we've seen this before. Like, we've seen forks that didn't go well. We've seen forks that did go well. It's really a function of, Like, I think if people are tired of getting ripped off by Ethereum, if Ethereum fees go really high, I think that the ones on the alternate chain would be more valuable. But if Ethereum is very cheap, they might not be as valuable, you know? And there's a lot of middlemen. They're like for instance, Compound, right? Like, who runs their servers? Is there going to be a Compound pointed to the contracts on Pulse Chain? I don't know that they're building that out, right? Like, there's a lot of fake DeFi where you have to beg someone to do something or else the stuff doesn't work anymore. You can't copy paste the community. So
to play devil's advocate though, and again, I'm more about the alternative applications. That's like what actually gets me excited, and the gaming aspect of it as well. So like actually Counter-Strike skins, even though this sounds like
gaming excites me
that's
as
the type
well.
of stuff I'm interested in.
Just for
but
the potential.
Don't people buy expensive art to collect?
Massive market.
That's the alternative side that I want to actually bring to the table here.
Yeah, so Richard, like you've a few years ago started buying a lot of luxury clothes and stuff.
What they're trying to bring up, and they're going to be long-winded, is that they want to know there's a market for this. There's US dollar there, Richard. How do we get it?
You can have the same thing in the virtual world, even though that application.
He's reconnecting. Hold up, he's reconnecting. Richard, did you?
Sure, people buy expensive art, but it's a lot harder to replicate it because you can't go back in time. So like if a guy made art and then died, he can't go make more art. It's very hard to replicate it. But like when you have procedurally generated, pixelated, low resolution art that's only stored digitally and people can literally copy paste it, that's like maximum the opposite of like physical painting. Go try and find someone that can actually paint you a copy of it. It's a lot harder, you know?
No, but it's easier to check if something was, if something's original on the blockchain rather than having a piece of art and having to take it to an expert that has to review it and see if it's a legitimate one. And there's been stories of even experts that are meant to look at whether art is legitimate or not made errors. Where the blockchain, it's much easier to check something's legitimate. Now, if you're looking at whether a blockchain exists a decade from now, ETH is ETH from a decade from now, and the risk that poses and you can create it on ETH, that's a different discussion. But theoretically, it has the same benefits as physical collectibles, physical flexing in the physical world. Would you agree?
No, there's a certain qualia of experience in the physical world that you just can't replicate digitally. It's just, you've got two eyes and your eyes can actually see depth, right? But we try and replicate that with 3D technology and televisions, and it failed terribly. They tried to shove 3D down your throat for 10 years. They gave up. So now if you go to buy television, it doesn't even support 3D because it sucked so bad. And so that's one example of the real world just always beating the virtual world. And, another example is smell, temperature, touch. So things that you can like physically interact with. And when you move your head around, they change. It's a lot different. And to tell you the truth, it's better. So I'm going to open something up in the real world. I haven't decided yet. Something outrageous because I've done the digital thing pretty hard for a while now.
I want to quickly intro.
Hold on.
That's Richard saying that he's going to dominate the NFT space.
I want to intro Irina, who's a crypto lawyer. Irina, are you with us?
Yes, hi guys. I am with you, and I'm really enjoying this argument.
Come on, Bish, turn your shit up.
Absolutely fantastic. There's so much I don't agree with him, and
you got Richard Hart with you, girl. You better turn it up.
Richard here. Definitely adding spice to the conversation.
Can we do it in the back end?
I agree with Ryan. Let's keep
I'll do it.
Because we've got communities from all over listening, and to a US community it might be okay, but I'm from the Middle East and we don't like swearing. It's really, haram.
Haram.
KK, by the way, KK, make sure you mute your mic, KK, when you're not speaking because
they're fixing it.
Irina, we have some questions for you with regards to just regulation and what's happening in DeFi for a little bit after, especially with Celsius. You have a couple of tweets that basically spoke about. Actually, do you? I think I've mixed you up with another speaker, but I'd love to get your thoughts on that 100%. Now we're currently discussing, this is the NFT hour, so we're basically discussing the application of NFTs and whether it's just a bunch of super expensive monkeys.
Yeah, the great thing being a lawyer, I have an opinion on everything, including things I don't know much about. That's being a lawyer for you. So I'll give you an opinion on absolutely everything. So yeah, glad to be here. Thank you so much for having me.
100% perfect. And then next up, we also have Jason Falovich. Now, for those unaware, Jason actually used to run at NFT, so the actual handle, on Instagram and a bunch of other social media profiles as well. Jason, I'd love to get your idea with regards to everything that was mentioned right now, just with regards to everything that Richard mentioned, and your take on NFTs as well, considering how prominent you are in the space.
Sure. Yeah, actually, I founded the brand at NFT with Mark Cuban, just for some clarity, at NFT on every platform. And the question, I actually just came on, so if you want to restate that question, because I didn't hear it. What's up, Ryan? What's up, Dave? A lot of my boys up here.
Good to be. I'll let you listen in just so you know what we're discussing. But I see Jack's got his hand up, and I want to introduce Jack as well. Jack, you've been early investing in a lot of companies, ex-Google, and the founder of Image Shack. I'd love you. You've got your hand up, so I'd love you to take the mic.
Hey guys, very good to meet you. Basically, I am early Googler, employee number 21. Started at Google in 1999, quit Google in 2005. Been in the image space, been in the crypto space from basically way early.
This dude's kind of legit. I follow
Bitcoin
him.
when it was $3. I think I actually sold Bitcoin to Richard at 30. So thanks, Richard. And Richard, totally agree with you on the NFT question when it comes to images and how images could be replaced. One thing that we haven't really talked about is the fact that the NFT itself, being on chain, can be used for the purposes of the gamification and what I would call a human API to the blockchain. So specifically for score keeping, a lot of NFT projects by themselves don't mean much if you're just selling and trading the pictures themselves. However, a lot of interesting NFT projects have roadmaps that can create all kinds of interesting storylines. Basically, you can fuse NFTs together, you can advance levels, you can mint more ERC tokens, ERC20 tokens by holding NFTs, then use those tokens to basically advance across the leaderboard, so on and so forth. So the way that I see the NFT space is actually a gamification layer that is on chain and can keep the score kind of like an undisputable representation of what your level is across the NFT roadmap. And pictures themselves don't mean much. They're just symbols how people can advance across the storyline. And that's what's really, really, really interesting to me, is because this is the first time it's not really about pumping and dumping of some sort of ERC20 token, but rather participating in a sort of a storyline that creative teams can imagine. So that's kind of like what we haven't talked about, but I see a lot of interesting projects out there that actually have the storylines that people can follow. So
it's all fun and games until your blockchain fills up, and then you're like, God, I wish we were centralized so we didn't have to pay $50 to mint something.
Yeah, but that's a separate question. Like, for example, blockchain is a new technology. Solana can go down, fees can go up, and so on and so forth. It's all the cost of playing, like, so to speak. Actually, I feel like when
I like how you said Solana could go down, but you meant to say Solana's price could go down.
I think everything can go down price-wise and technology-wise. But speaking of, let's imagine a perfect world where blockchain actually stays on and it's proof of stake. We don't pay a lot of fees. At the end, one of the interesting ways to start on blockchain for the regular normies, I would say, is to basically participate in play to earn. And NFT roadmaps is basically what it is. It's play to earn. Again, you can start on level 1, you can collect some NFTs, then based on certain action within that gamified universe, you can fuse them together, end up with some sort of level 2, level 3, and eventually get to level 10. That is a representation of your effort of, it could be your collection effort, could be some sort of an action. But anyway, so the way I call it is a human API into blockchain, where those humans that play, they don't really understand what they're doing, but yet they have the full ownership of their storyline.
So guys, just quickly, KK, I was just muted. Can you hear me?
Yeah, I can hear you loud and clear. I think Ryan has his hand up.
Guys, real
Yeah, I'm
quick,
going to give the
while
mic
they're
to Ryan and
interrupting,
Evan as well.
share this out. Do me a
Evan, but
favor.
but
Share
before I
this
do it,
out.
we're
Retweet
gonna
this
be
on
bringing
Twitter.
these people
We're going
on
to
and
get
off the stage.
Orca
We've got
back.
the
This
Solana
has nothing
creator
to
of
do with
Solana
Orca, but I
NFT,
was just
works for
mentioning
Solana
that.
Labs, who's going to be coming in
Share
to
the
speak as
stream
well.
out, guys.
We're good
We're
to
going
get
to
us
stay on
connected.
here longer,
As we bring him up, we're going to be
and
cycling
the
through
viewership is good.
panelists
Give
as well,
me a
because we have a
share,
limit on
and we
Twitter.
will get
So
this
everyone
going,
was told we
guys.
didn't
We're going to
inform everyone.
listen up.
But yeah, Ryan and Evan,
And
please
biceps in the chat. I need
unmute whenever
biceps
you like.
all over
Hello,
the
hello.
chat. Biceps,
There's some interesting
biceps.
tech that I think it's important for people to know about when we think about long-term storage, and the cost of the blockchain. And I agree, it's very important to think about where these assets are actually stored, and are they controlled by an entity that can change that. One technology that I'm particularly interested in, I don't have any financial stake in it, is Arweave. So Arweave is a fascinating solution to storing assets for long term. So for instance, a typical 10,000K PFP collection, which I want to remind everybody is not what NFTs are. Like, that's just a very, very, very small subset of what they are, could be. But if they want to store all 10,000 of those, they typically are about 7 kilobytes each. It would, for 200 years of storage, it's 23 cents for the project to do that. So I think there's an answer now, which is good. Folks can use technology like Arweave, which has built sustainable long-term foundations to fund future storage. And for 23 cents a project could protect those assets for 200 years. So it's just, as we have these conversations, I think it's important that people know about those technologies, and they do exist. Does that solve all the problems? No, but it is. It's good to understand that.
Evan, feel free to unmute, man.
Totally agree, Ryan. Hey, Mario. So yeah, I mean, on a high level, we need to also, keep in mind that there's an entire generation currently that's being trained on, around blockchain technology. The 15-year-olds, the 18-year-olds right now, the new generation that's growing up playing Roblox, right? And all these other games. I grew up playing World of Warcraft and Call of Duty and Counter-Strike. And if we realize how far we've come so far with blockchain technology within just technically around 10 years or so, it's just mind-blowing. It's the fastest growing technology if you think about it, right? And my take is that, Richard, I agree with some of the things that you've mentioned, but then, if you take a step back and realize how early we are, and that currently these solutions are currently being built by builders, right? By us being so early in the space and using our brain on figure out solutions. This is, this is something that excites me on a personal level, because of course, blockchain is not perfect. What is though, right? And when it comes down to, someone shared an example earlier, like sharing your Counter-Strike or Call of Duty skin. Of course, that's going to happen. That's what everyone expects in the gaming community to happen, or the majority, not everyone, right? But you have to take a step back and realize if you kind of realize the progress that we've had this past couple of years with NFTs, and the doors that are currently being opened to builders and brands and individuals and communities. This is the exciting part. It's not just trading JPEGs, but the fact that people are trading moonbirds and bored apes and, like clones, that's something that basically requires validation, and blockchain offers that. Before blockchain, that wasn't possible on a digital level, right? But now it's the beginning of how things are going to take shape within the next 5, 10, 20 years. And we're so early. So I agree, it's not perfect. But on the other hand, I don't see like generated art or NFTs in general going away. I think that the more people use blockchain technology, generated art is going to be like a smaller and smaller, and art in general and JPEGs is going to be a smaller percentage, but that's going to keep growing. And especially once we see more, elements and assets coming in from the tech side, such as music and SBTs and, titles later on, and pretty much everything around it, right?
Yeah, so we've got. By the way,
So hold up,
before we
just
continue,
to
go ahead.
understand what Evan is saying. Evan, you're saying that the speculation aspect of it is bound to decrease in the upcoming years, and the utility aspect of NFTs is bound to go up. Is that your point? Because you
I
cut out
agree with
towards the
that.
end.
Yeah, sorry about that. Yes, absolutely. I'm going to give you one quick example. you have to also understand that there are new economies being built.
Sorry to cut you off, but I just want to add one more thing towards your points.
Love your show and truly appreciate the variety of your content you bring.
He didn't.
Guys,
he
there was
didn't say
another
that. He
$20
says
super
the
chat from
applications of
somebody that I
technology
missed.
now
I
are
saw
full,
it and I
but
pulled
the
it up, but I
technology
forgot to
itself
mention
has
it.
a lot of
Can
utilities,
somebody
and we
tag that
agreed
person
on some
who
of
it
those
was,
utilities.
please? And if you are that person, can you
Digital
throw a bicep up
identity,
in the
digital
chat,
medical
please?
records. We're
Thank you
investing in
so
both
much,
companies
Crypto
doing both of
Gaming. I
these
really
things.
appreciate
Those
that. It
are
helps a lot.
applications that
Thank
make
you.
sense. Just the PFP aspect, Richard had valid concerns with.
So
I
okay,
think art's
what's
great.
the
I think
difference?
PFPs are great. Just don't ever pay for them. You know, it's like it's fine. It's fun, but just
You
don't
pay for
overpay.
watch though. You pay for watch though, right?
He means not. He means don't.
I mean, so if you believe in the Lindy effect,
Well,
the
I mean,
longer a thing
demand and
has been
supply.
around. Yeah, but like try and go make a watch and see like I've got $9 million of Rolexes, but I can tell you that it would be very hard for me to go start my own Rolex company, if not impossible. It would take me probably 8 years to like try and ever get to their spec, but I could get to make an NFT like next week.
Yeah, but you can also create a website next week, but it won't be Amazon. So I think the ease of creating NFTs, doesn't diminish their value, just makes it easier to scam people with NFTs. At least that's my take of it. But I agree.
It's easy to make ERC20s too.
I just want to add one more point, right? Like
it's the
the
same shit.
economies and the
99% of it will
ecosystem
go to
side of
zero.
things,
Period.
right?
End of
Like
story. NFTs
when
and
I bought my
ERC20s
clone,
and all other chains.
and then Nike around February airdropped me $20,000 worth of NFTs with the monolith for all the NFT enthusiasts that are here today. That was like something new, and that's gonna keep growing because we enter a phase right now with blockchain tech and NFTs in which you don't just buy, for instance, a Burberry T-shirt for $1,000 and that's pretty much it. You throw it away after a few years. You basically buy a digital asset that basically retains its value for as long as demand and supply makes sense. And then at the same time, those brands, those big players in the space that are coming in right now, reward you for your loyalty, reward you for being part of a community and for supporting that brand. So, that's just a small segment of NFT tech in general, right? But if you consider that and how this is going to change the game across multiple markets, that itself is astonishing, right? So you can't just say that NFTs are not going to make it because of the technology. Of course, the technology is not perfect, but do you realize how early we are? It's like saying like back in 1925 that cars are not going to make it because too many people die, from car crashes.
We're in the beginning. I actually tweeted that today, Evan. Sorry to interrupt you, but
you can't really not
we're
agree
in the
with him.
beginning
He's being pretty
of the bottom of the first inning of NFTs, in my opinion. So go on. I just want to jump in because I do fully 100% unequivocally agree with you there.
Biceps in the chat for Sam switching through all the names.
Mario, I need to go to a meeting, and so I've got to bounce. But I'm getting accused right now of not defending NFTs and sort of choking during this argument. And the truth is, I'm not going to get baited into an argument by somebody who's uses crass arguments and is a zealot. So that's just where I stand. I don't think it's professional. I don't think it's good for the space, and I've got better things to do. So take care, everybody.
I appreciate it, Ryan. Thanks for being here, man.
I agree with him. The refuge of the person that lost the argument is ad hominems. But the funny part is he's doing the ad hominems.
No. So I want to agree with we.
What the fuck is ad hominems mean?
That he's made throughout the argument. For anyone listening as well,
bunch of nerds.
Not defending NFTs. I don't think was the case. I think we all concluded that NFTs have utility. There's flaws in the current model. I think Richard pointed out to the pricing and the valuation and people getting dumped on being one of the main flaws, which is understandable so early in the technology. We understand there's a lot of applications. We all agree on the applications of NFTs. We also agree that we're far from perfection. Now, obviously, Richard's way of making the points was a bit crass in the beginning, and it's tough. Even I was caught with I didn't know how to handle it initially, so I don't blame Brian for being caught.
I hope these guys never get in a fight.
I think Richard, you agree with me that you could come in pretty abrupt at times.
So I don't know how to deal with it.
I don't know. I'm listening. I'm trying to be respectful here, but
that's hilarious.
We're not talking about IPFS and on-chain, and we're definitely not talking about on-chain correctly when it comes to NFTs. So it's just doing a disservice to the technology at hand. So
But now's your
Yeah,
chance
agree.
to educate, bro. Like you're on the call. Like just if something's not being
Yeah,
presented
but
accurately,
you're here,
fix it.
Richard. Richard, but I'm listening to you, and I'm just listening to you the entire time. I'm just trying to gauge why you have this hatred towards. Yeah, fuck JPEGs. Okay, fine. You want to go ahead and throw JPEGs to
You're
the
gauging it. Guy,
to the
he owns
corner, but let's talk
hex.com.
about what NFTs are going to do. Like, let's take Alfa Romeo for example, embedding NFTs into all their 2023 vehicles. How that's going to change the game completely. Like, we haven't touched on that, and we're just talking about the 10,000.
I'm ready to touch on that. Please tell me more about that.
Hold on. I'm not finished. I mean, like you're cutting me off. I didn't cut you off.
I said, please tell me more. That's the opposite of cutting you off. I want you to talk more.
You are cutting me off, but it's okay, Rich.
You talk more.
Okay, it's okay. I get it.
Go ahead.
You want to sound loud,
let you
but
finish this.
at the end of the day, like, let's talk about on-chain. Let's talk about the embedment of. We'll use the example of Alfa Romeo
this dude's in
going ahead and
trouble.
putting it into their vehicles, which will allow the vehicles to go ahead and appreciate. We'll have service records that are on point, unlike Carfax, which, if you use Carfax, you can go ahead and, do shit to where you can erase things that have happened on Carfax. And that's been stated on multiple platforms. Multiple news companies have reported on that. And you're just touching on the 10,000 PFPs that are made on Fiverr and sold and most likely go dead. But like, let's talk about, I'm willing to go ahead and talk to you about on-chain NFTs. We can touch upon on-chain monkeys that literally came out with the first, I would say the first that I ever heard of, the first on-chain product out of all the garbage that has been put out here into the NFT space.
I just feel like everybody is making money on the pictures, but then saying like it's all about the tech, bro, and then dumping on everybody's heads like.
But hold on,
like nobody's using it though.
That's everything, Richard. That's everything, Richard.
I guess
like
the market.
Yeah, so you put value on the like
market
you wear
makers?
all these expensive clothes, right? So you feel that those Gucci suits cost $10,000, $40,000, $50,000, correct?
Yeah, like usually 10, I guess, like 5 to 10, sure.
Okay, so you say like that. I saw you in that green outfit. I don't know how much it costs. I'm just going to give a round number of $20,000 out there. Some people feel like JF here has that golden ape. He feels like, hey, it's worth $2.6 million, and so do 20,000 other people. They see it and they say,
I think
yeah,
it's worth
that
more,
shit is worth
but
2.6,000.
He's got good
I think it's
points.
worth more, David.
Here's what I don't understand. Here's what I don't understand. You're trying to have your cake and eat it too.
Richard's also
You're trying to have your
So
cake
what
and
I'm
eat it too.
saying to you is, you're trying to tell us that it all should be free. It's all overpriced, but ultimately the people put value on shit. I think Yeezys are overpriced. I think half the stuff that you wear is overpriced. It shouldn't be $40,000, $50,000. Like, what makes it that price?
Actually, I agree. So, Richard, would you say punks, let's say crypto punks, are they overpriced right now at a minimum price of $80,000 for one of those?
Yeah, yes, I think they are. So like,
Why?
So I'm gonna explain it. If my friend can stop revving the engine a little bit, bro. So like, we're on a Lamborghini ride. So basically, like, we've got 3 issues here. Okay, issue
Did you
one.
say you're on a
is-
Lamborghini ride, Richard?
Yeah, I'm on a Lambo.
That's,
So like,
that's very humble. I'm joking.
well, yeah, I mean, it's funny. He's got it in quiet mode. So like, issue one is counterparty risk. Everybody loses with counterparty risk. So if every NFT project could switch to IPFS instead of the counterparty risk stuff, that'd be
Somebody
better
else is
for
driving.
everybody.
It sounds like.
So that's progress that we can all agree on, right? We don't want people getting ripped off. There's no reason for people to get exit scammed or hacked or whatever. And you reduce attack surface when you use IPFS instead of centralized servers. So I think we can all agree on that. And that's just a huge win for the call. The second issue is price. And I know you guys care about price because you had a segment earlier in the show where you talked about the Bitcoin price.
Richard, it's not true. It's not true. You know what I care about? When I have this Bored Ape, do you know why I have the Bored Ape? It's because I can go ahead and network with people that potentially maybe I can't even reach. And you know what? The Bored Ape events allow me to go ahead and get into these events and talk about the things that I want to go ahead and do. And maybe, just maybe, I can go ahead and level up my company to the next level. That's why I have a Bored Ape. And you know what? The price, if it costs 150 ETH, it was well worth it because I've doubled that by being able to network at these events. Take Ape Fest. When Ape Fest was at NFT NYC, well, you can only get into Ape Fest if you had a mutant or Bored Ape, and here you go. You get in. You know, some people obviously went there to see Eminem and Snoop Dogg rock the mic. That's great. Others went there to go ahead and network and maybe potentially meet Guy, who I think is, you know, as a project manager, phenomenal. How would you be able to meet Guy? You wouldn't be able to meet him without a Bored Ape or a mutant ape. But if you had one, you got to meet him one and got to go ahead and pick his brain for 5 minutes. That in itself, that 5 minutes can possibly change somebody else's life. It's the same thing what Gary Z does to be friends.
So Richard, I wanted to make that same point, Richard. Like, and another point is always the signaling. So I have a CryptoPunk as a profile picture, the same way you have beautiful Gucci clothes. And to be honest, you know, I started. Hated the concept. I used to look for homeless every day just because signaling did have an impact. Someone convinced me, Mario, when you're in meetings, it does actually play a role. So I have a CryptoPunk photo for that purpose. Why else do I have it? Why else do I have a verified CryptoPunk photo? I don't think it looks nice. I think it looks goofy. I don't like the thing on his head. But I have it just to signal to people like, hey, I'm not bullshitting. I did make some money and I believe in crypto. That's another signal. It's not just money. Do you believe that's not worth? So if you don't think that's worth 80K,
That's a lot of
I don't want to seem confrontational. Just really
speculation.
explore how you're
I mean,
I'm
But
like
these guys
the
have good
world's grand
points.
champion of overpaying for shit for flex value.
Like,
I got 9 million in watches, 3 million in cars, the world's largest diamond, which I paid 4.2 million for. I'm the fucking grand champion of overpaying for shit for flex value. But I like my shit to go
I'm
up.
not gonna lie, Richard. I'd rather buy a $4.2 million gold ape than a $4.2 million diamond. And maybe
100%.
Maybe I'm crazy,
100%.
but I generally get way more value.
Yeah, but like I got
paid
like
2.2
100 articles in the mainstream press out of that. Like it
thought
was worth.
I mean,
So
I
Richard,
mean,
you
my
just
gold
made
ape-
my point. So like you went ahead.
Yeah,
and bought
because
all
I
these
agree
things
with
and
that
you got-
point. Yeah, I'm making your point because I agree with it. Like, yes, flexing
So then
retarded
there's
shit does
value
get
to it.
pressed.
I actually turned down $4.5 million for my gold ape. That's how much value I put in it. Because this is my digital footprint. This is my digital profile. What the fuck am I gonna do with a diamond other than say I own that diamond?
First of all, I'm gonna
Plus,
say
it's
this: you
human-
own a Bored Ape.
plus-
You don't need. You don't. If you have a Bored Ape or you have a CryptoPunk, you don't need a blue check mark, especially in Web3 anymore. Like you have one of these things in your PFPs and you verified it, you don't need the blue check mark. It's worthless. That's Web2 shit. Web3 shit. You got the top tier NFTs. You are now in the game. You are now able to access all the big time players from Web2 who are translating over here into Web3 into ours.
Are those Crypto Kitty guys in this? Did the Crypto Kitty guys get back up, or did they stay down, or like, are they flexing like the ape guys, or I don't know. I don't know the prices on those.
No,
But it's not even
I would
that.
say crypto.
Go
Yes,
ahead,
I would say
Jake.
CryptoKitties though are different because CryptoKitties are not limited to a certain number of PFPs, so they weren't designed. That's why the price went down. So it's a fundamentally different tech to punks and apes because you can't have more than 10,000 punks.
By the way,
apes.
aren't you able to?
But-
Aren't you able to just copy someone else's NFT, get the hexagon on Twitter, and that's it? You just own a CryptoPunk and you don't need the blue verification.
That's called fraud.
But it doesn't,
Yeah,
it doesn't exist on the blockchain if you do that. Like it isn't
Yeah,
the
so you can't-
original doesn't exist.
Your Twitter can't verify that it's original, and then it does the opposite. It
Yeah,
destroys
but
your
can they?
reputation.
Can they?
But Edward,
Can they? Can somebody like legally enforce this? Seriously, like out of curiosity.
legally enforcing using someone else's punk or
Can
ape?
I ask you guys an actual
Legally
question?
enforce you
It's a bit-
using somebody
Yeah,
else's
you can
punk as a
legally
profile
enforce that.
picture.
You can.
So
Yeah.
so the most popular NFT is the ape stuff, right? I think.
Yeah, apes
Yes.
and punks. New words are
Do
pretty
they
cool
use
stuff.
IPFS or is it all just counterparty risk?
Edward, do you want to take that one? You've got your hand up.
Well, I didn't want to take that one, but I wanted to come in and first of all say hello and how's everybody doing? I'm Eddie. I work with Solana Labs and the top 20 or so NFT projects. I come from DeFi and I love everything, all of this. I don't have a particular stance on either side, but I wanted to have a conversation with Richard because everyone keeps arguing with him and just defending their bags. I actually want to talk to him about the application of some of the tech that these NFTs have and the stuff that I've actually been building and the stuff that's working and that's there. So what's up, Richard? Congratulations on Hex.
Thanks, man.
It's been
Yeah,
referenced
by the way,
in a ton of my
Edward, I'll give you the mic.
efforts.
I just quickly, Richard, I want to ask you a question just very quickly. Yeah, so CryptoPunks was not on-chain. So I'll answer that question before we move on. Wasn't on-chain initially, but now is on-chain. So they're on the Ethereum blockchain and Apes as well. But yeah, go ahead, Edward. Sorry to interrupt, man.
No, you're good, brother. How's everyone doing? Good morning. Good morning.
Good, man.
Morning.
Thanks for being here.
So, I mean, I just wanted to talk about just some of the things that I've been personally working on with my bare hands with NFTs and how I think that it benefits everyone in here. So I was a little taken back and confused with your lack of support for NFTs, given how big you are in the space. And that's fine. You know what I mean? It's cool. Maybe you don't know about some of this shit that's going on. So I just want to tell you about
This guy's a pro.
And, you know, give me your opinion on it.
This is a pro talking. I don't know pro at what, but he's a pro at
that are in this
something.
space where NFTs came second. A lot of us are DeFi guys, Bitcoin guys, Bitcoin maxis, and I support all of that. I think Bitcoin's the future. I think it's fucking awesome. And I think NFTs kind of came second, right? But now what's happening with Solana and the amount of active wallets is that NFTs are becoming a point of entry where, like, my aunt or uncle, I just tested this with them. We released this tech at NFT NYC. We have something called Cupcake. All your cell phones have all NFC readers inside them, right? So imagine going up to something, tapping on the sticker, whether it's a painting, a skateboard, a concert ticket, a vinyl record, whatever it is. And within 30 seconds and 2 clicks, you have a custodial wallet that your cell phone number owns and an NFT in that wallet without having to fiat on ramp, without having to convert a whole bunch of tokens to USDT, understanding that nonsense, waiting for 7 days for Coinbase to say you can have your money and all that shit. So I think it's like really special to have some things like this as a point of entry. Like, how are they going to buy Hex if they're afraid of crypto, but they're willing to tap their phone on something and have a decent experience and, you know, come in that way. So that's like one way.
I agree with on-ramps, bro. Yeah. I think on-ramps are great. So from the on-ramp perspective, I just want to see people take minimal. So like the networking angle is great. I just wish it cost less. The on-ramps is great. I just hope that they're low fees. Like, you guys got to remember, crypto was invented to get rid of middlemen and increase efficiency. And so like I see tokens that perform taxing on a transfer, and that's literally maximum fee instead of minimum fee. And that's the opposite of why crypto is invented. Or I see counterparty risk. It's the opposite of why crypto is invented. So things that help on-ramp users, hopefully with minimal risk, things that don't have admin keys, things that don't have counterparty risk. You know, I like a lot of this stuff. So, and look, you know, I got in at Bitcoin mining at 50 cents, bought it at 30, jumped right down to 2, held it down 93%. You know, so my first experience with Bitcoin was the bubble, but it worked out in the end, right? So like, even though I got in through a kind of sucky way, it worked out in the end. So I like some of these points you guys are making.
I got a question, Richard, about your diamonds. I think it's pretty cool you own that. You know, no disrespect at all. So with the transparency of NFTs and everything on the blockchain, like I know what my gold apes are worth based on rarity and such. How do you know you actually own the largest diamond in the world? Like, you know, there could be someone that just doesn't give a fuck to you know, flaunt that or they'll want the clout that's sitting with a diamond.
Yeah, it's true. There could be a bigger one somewhere else for sure. And you know what? You guys are going to be able to help verify more because I'm going to make an NFT out of that shit. Even though I tell people, look, don't overpay. If they won't take my advice, I'm going to offer you the world's biggest diamond NFT. I think I'll have 5,555 copies because 10,000 worked out for the apes guys. I think that's their
Richard,
supply.
I want to copy.
You know, like, yeah, I'm going to jump in the game, but I don't know.
Well, Richard, it's
all right. So what's the 10 asset?
I just want to make sure you know, Richard. Sorry about that, David. I just want to make sure you know that it's not all just like a freaking big nonsensical thing. Like, I've literally met tens of thousands of people like in real life. I met with Gucci yesterday. Like, we're talking about authenticating their fucking merchandise using some of this tech. So I mean, I just want you to kind of have an open.
Bro, I buy Prada shit. Hey, listen, for real, listen. I buy so much money in Prada shit, it's retarded. And some of my items come with a blockchain certificate that I don't know how the fuck it works, but apparently I can go look up my shit's authentic on a blockchain somehow. And everything I buy comes with some RFID shit too, that apparently somehow I can verify my shit's authentic. But here's the funny part. I don't know how to fucking do it. And I'm not sure it can even be done, to tell you the truth, because they advertise it, they hype it. But then when you go to like actually check it, it's just like the blockchain. Some guy was telling me, hey man, you know, I'm running my own node. I'm so hardcore, you know, it's going to take 33 hours to download it. And I fuck with it. I'm like, hey, I'm sorry for the cursing. I tell him, listen, man, how do you know you didn't download a fake client? And he goes, oh, I verified the SHA-256 and the PGP. First, I know you didn't, you lying, okay? But second, how do you know that those two numbers you're verifying against ain't fake? And he eventually has to get it into his head that it's all social verification. That's how you know anything is real, is from the social aspect. Because like you could be talking to a parallel Eclipse network. You could be talking to, scamware. Like who here actually compiled their own client? How do you know whatever wallet you're using doesn't just send a copy to the devs of your keys? You don't. Nobody in here is complying with their own wallet. It's not happening.
I always talk about that
Who's
nuance,
generating
man.
their
I always
seed
try
words
to
in a
get people to
tempest
learn about
cage
the
to
nuance.
prevent, of your seeds through EMF radiation? Nobody is. Like we're all taking some shortcuts, reasonable shortcuts, I hope, to like have some convenience with this stuff. But in the end, like it all comes down to trust. Like in an industry built to remove trust, there's still a lot of trust.
I think you talked a lot about flexing. Flexing your diamond, flexing your world class Rolex collection. I mean, listen, it's dope. You're driving a Lambo, dope. That's you need money to do that shit. Cool. I mean, from NFT perspective, I gotta be honest. Like, I can buy fucking NFT, and yesterday I sold to CryptoPunk, and Bill Murray bought it. That's for me. That's pretty fucking dope. Like, I can't really speak like that outside of chain because I wouldn't probably know what Bill Murray bought of mine or what he's purchasing, right? So, there's an element beyond just this is a piece of, it's a JPEG for whatever purpose it is. Bill fucking Murray, one of the legends of the industry, came of entertainment, came into our space and bought a CryptoPunk for me. There's something to be said.
That is
about
cool.
that.
I like it.
Actually, Jonah, I know you got your hand up.
I hope he makes money on it.
And then David.
Yeah, sure. I actually I love Richard. I listen to him on a few podcasts. But I would be curious if there would be anything that would get you into NFTs because you just are so against them, and I'm just curious what would get you your foot in the door for that.
No, for real. I'm
Well,
going to
Richard,
launch a 5,555 copy NFT version of the world's largest diamond, which used to be called the Enigma. It's since been renamed the Hex.com diamond. I'm going to do that. I mean, it's easy. I just have to choose. I'm going to basically, I don't know if I want to give away. I guess I could give it away because I still have the biggest diamond. So I'm going to take a picture of each of the 55 facets. So this world's biggest diamond is 555.55 carats, and it's cut to have 55 facets. And so I'm going to take a picture from every one of the 55 facets to make each NFT slightly unique. And then I'm going to customize the backdrop of what they're in front of, license or have created some type of kick-ass media. And I don't know whether I'm going to regionalize it because it works so well with rap songs. I'm probably going to make it regional. And so you'll have like your version of a different angle of the diamond, a picture of it, and then regionalized backdrops. And I think that would be fire. I think that would, as far as NFT stuff goes, I think that would hit pretty hard. But then I hope people don't overpay. But look, markets, as you guys all said, the market set the price, and people treat this stuff like pseudo gambling, and so the prices can get pretty silly.
So what would be the price that you would open at then?
I had never even thought about that, dude. I didn't even know that was a choice I had to make. I never got that far into the thinking.
So you could do a free mint, or you can go ahead and start off at some, it's 0.1. I don't know what platform you.
I think maybe a reverse auction would work pretty good. I think a reverse auction would be a good idea.
But what do you think what do you think your NFTs would be worth, though?
I have literally no idea. I mean, I've savaged the NFT community a lot, but I'm also trying to save you guys with gas fees with Pulse Chain. So it's hard to say, man. It's like 50-50. Half hate, half like. I don't know.
Richard,
No, but it's like
if I paid like
$10,000 for it, is that overpaying?
I can't tell if you're kidding or if you're really going to do this. But either way, this has been.
He's going to do it.
I just want to throw one more point out there, and then you guys can continue to argue with each other. It's just amazing.
I don't think it's an argument. I think it's just a passionate debate.
Yeah, I just don't. I don't know. It's just goofy. I just wanted to share one part that was like fucking fascinating for me about NFTs and application, because that's what I care about. I have to be a megaphone for these devs and these tech nerds that don't know how to share what their technology is to the real world and reach the masses. And I've done this with Lyft, with Postmates. I have a decent track record. But I was taking a walk with my favorite Ponzi app, Steppen, and I was earning tokens walking down the street. And I saw this lady who came up to me at the end of the beach, and she was like, "Yo, are you on your Steppen walk?" She was like my mom's age, right? And I was like, "What?" I was like, "Yeah, I am." I'm like, "Isn't Solana awesome?" And this lady had no clue what Solana was. She had no idea that she was using crypto. She had no idea she was on chain. This woman fiat on-ramp money, converted it in an app, transferred it from wallet to wallet, purchased an NFT, walked with the NFT, earned a DeFi shitcoin, and then transferred that to USDC and got it to her bank. And like that shit is fascinating to me. So if NFTs can help people get on chain without knowing they're on chain, then I'm fucking happy. I don't care who has a bigger diamond or a bigger ape. Like, you guys are all awesome, and I'm supportive of everyone up here. But I just think that the mass adoption is closer than we think. There's really cool tech. I literally met with the
Very
CEO of Gucci
close.
2 days ago,
It is
and it
close.
was
It is
fascinating
very
how
close.
interested he was in this.
I don't know about
So
video
yes,
games, but
and what is it, Richard? I think a lot of these stuff that are on your Versace suits and shit, a lot of these guys jumped in early and threw RFIDs on their shit and didn't have a clear path of anything. But that's my job to come and fix that. I'm going to do a damn good job at it. I haven't failed it much yet. So I just wanted to come up here and share that I see the mass adoption happening. I'm really excited about
I
it.
want that
love
guy on
Bitcoin
my
Maxis. I
fucking
love
team.
Solana. I love ETH. I love all of it. And
That
I
guy's
think all you
You
guys
could
are
tell
great.
right away that
Just
he
wanted
was
to
a
come in,
professional.
share
I
my
knew right
sense and a
away.
couple
I
experiences.
knew right away. He knows
And
how to
I'm
interact
going
with
to step
people.
back down so you can bring back speakers. I knew you had me on schedule, but just wanted to say hello and give love to all you guys.
That's how you
Spaces
gauge
rock,
people,
Mario. So
guys.
thank you, bro.
I appreciate it.
They
Thanks a lot,
interact
man. Thanks
with
a lot.
the
We're
group.
bringing in Tony. So Richard, are you up for a debate? I've got a lot of people, and I'm sure you're going to guess, sending me messages about Hex. Do you mind if I bring someone to debate the projects that you're currently working on?
Did you guys notice that I never mentioned anything about Hex at all? Like, it just does its own thing. I never even talked about it.
You touched on it, but didn't talk about it. That's true. But are you okay if we bring someone to debate them?
Yeah, dude, I love debates. Debates are awesome.
Hey, Richard, what's the value of that diamond?
I mean, I paid 4.2 for it. I think I got a really good deal.
Sam, if you have to jump off,
one of a kind, one in the universe kind of things, space diamond. I don't know, 20, 30 million,
interesting. I'm gonna
probably
stay on
my
it a little
guess.
longer.
But, I
really
think that luxury good purchases get hit really hard when the stock market dumps. So, maybe it'll be a bear market, but I bought it so good. I mean, maybe it's only 8 now, but there's no way you're going to get that for 4. Like, it's going to be impossible.
How long would you buy it?
I think I bought it like 6 months ago, maybe.
Oh, gotcha. Cool. I was just curious. Actually.
Cool. So I'll refresh the space.
I paid crypto for it, dude. I paid for crypto.
Oh, really? All right.
Yes, Sotheby's took crypto for the hammer price, which was 3.6 million pounds. And then they wouldn't take crypto for their money because they're scared. And you had to do a bank wire for that part.
All right. I like that. That's cool.
Cool. JF, I'm gonna refresh the room and introduce Tony to get into the debate with Richard. But everyone that's listening, I think that the space, the agenda changed pretty quickly. But I appreciate you all being here. We've got 3,200 people listening, which is a record. I didn't expect.
I mean, like it still is like NFT hour. But I mean, like the agenda, the agenda that we have like whipped up, like we wanted to discuss wash trading, NFT money laundering, etc. But I think we covered a couple of pretty valuable.
Man, I'll be honest. I'll be honest. I've been watching Richard. I've known Richard, not personally, but I've known Richard since I got into crypto, and I've watched some of his videos, and I know he's very polarizing. And I knew that if I bring Richard, I was talking to Bob. I'm like, Bob, how do I moderate the room? Richard's coming. He's like, who's Richard? I'm like, watch this video. I'm like, Bob, what do I do? He's like, Mario, I don't know. You're on your own. So it was a tough one, but it turned out really well. But Richard, I appreciate you being here. I appreciate everyone that joined the stage so far. So before we kick off the debate, just want to tell the audience, thanks for being here. If you have questions or if you want to participate in the giveaways, we're not giving away a $4.2 million diamond, but we have $10,000 in giveaways. Make sure you click on the link in the pinned tweet and then join all the communities on Telegram, Discord. We don't shill any projects. We've never shilled a project and not planning to shill any project, not even the ones we're incubating. So you can join the groups, participate, ask questions. We're reading all your questions, and we're trying to ask some of them to the panelists here as well. So click on the pinned tweet at the top of the space to join. So you have to subscribe to the newsletter, join Discord and Telegram, and make sure you share this space.
Share this out too. Press the share button on
You're not in
YouTube.
the space, as you know.
Yeah, smash that like button, guys. 117 in here, only 86, only 66 likes, guys. What the heck is that all about? Smash
I swear,
that
Tony,
like
are you on a Nokia, bro? Like, what the fuck? How long did it take you to join?
Honestly, Twitter is about as efficient as Solana's uptime, so it's just a bit laggy on my end. Sorry about that.
Yeah, man, your I don't know if it's connection or your audio. Is it your connection or your mic?
I think it's the connection to Twitter. I keep on clicking join, but it's kept on clicking that. Hey, look,
I can
you're going.
I can hear you now. It's all good now.
Yeah, okay.
It's all good now. All right, man. So you wanted to come up on stage to have a chat to Richard about certain questionable things that Richard's doing, and Richard's not an easy person to debate. He's been in this space for a long time and knows what he's talking about. But you've had the courage to come up. I'd love you to take over the mic, man. Ask any questions to Richard. And let's dig into the points that I'm sure a lot of people including a lot of people that DM me, want us to address.
Yeah, for sure. And Richard, it's nice to meet you. You're OG in this space, followed a lot of your work. These are less questions about you yourself and more questions about just the Hex token. So nothing about you personally. But yeah, it's nice to meet you, man.
Hey, pleasure to meet you, bro.
This is a
Yeah.
freaking amazing, guys. Please sit back in your
Questions
seats.
about Hex. Just before we go into it, I'm just going to give a quick description of Hex. Please do correct me and interrupt me if you feel like I misrepresented in any ways, just to kind of give everyone a bit of a backdrop on what we're speaking about. Are you okay with that?
Yeah, everything sounds good.
This is interesting.
Yeah, so Hex is a token on ERC20 token on Ethereum. The
Oh,
utility
that's a
of Hex
shill. This
is
is a
that
shill.
you can stake it and earn rewards in Hex. Once you invested in some Hex, you can stake it and you can expect to earn a good API on those Hex tokens if you choose to lock it up from anywhere between 10 to 5 days. And after that, you can sell the Hex token for profit.
1
That's
to
what
5,
the
5, 5,
Hex
5.
website states and is also what the token is generally used for. It claims to be a certificate of deposit and it claims to generate an API purely through inflation. I have said nothing wrong there, correct?
I mean, you're breaking up a little bit, but it sounded pretty good. The minimum stake length is a day. The maximum is 5,555. I mean, yeah, that was probably one of the better explanations I've heard. Yeah, it sounded pretty good.
Okay, so I just want to not misrepresent your token, and I got most of this information from your website. So basically, let's start from the very beginning. The first question is does it go through the Howey test? Is it a registered security? Because I went to your website, and one large aspect of it is, hey, we're not an actual security, we're a certificate of deposit, which could be argued a bond is a part of the security listing. How do you see people that say that you're a security?
Oh, I'm like the grand champion of explaining this to people. So you asked the right guy. Security laws are made to protect people, and people get scammed all the time. People run away with their money. Like you just saw Celsius file Chapter 11 bankruptcy today. I warned everyone, told them to remove their money a year and a half ago. I think some people listened, others didn't. So what do the securities laws do to try and protect people? Well, they state that if you give money to a common pool with the expectation of profit solely from the work of others, and there's critical entrepreneurial or managerial effort, then you may have a security. And so these are the legs of the Howey test, and those last two were kind of added on, not case law legs, but just they wrote them. The regulatory agency just wrote them. They're not actually tested in case law, or they're not from case law, which would be stronger. People don't realize that like just because a regulator says something or writes something, it doesn't mean it's actually so. And the regulators sometimes win in court and they sometimes lose in court. And what makes things truly so in America is the judicial branch, of which the regulators are not. They're in the executive branch. And so case law and jurisprudence is really what decides. I mean, just recently, actually, the SEC got
Richard,
annihilated. Yeah.
Yeah. So sorry to interrupt you here.
Yeah.
But again, I do agree with what you're saying. Some of it is true, some of it is less so, in my opinion. But this is actually, the Howey test is actually not established by the regulator. The Howey test is established after R.V. Hari, which is actually American case law. And the
I know
Howey
that.
test,
I know that. I agree with that. So I'm telling you that the first legs of the Howey test are from case law, but those last two that I added with critical entrepreneurial managerial effort are not. So the first part,
also critical entrepreneurial effort is no longer considered a big part of it. The Howey test only consists of 4 parts as of active enforcement, which is
I know that, but I'm adding parts outside Howey, like family likeness test. I'm going above and beyond them. I'm showing you things that the SEC has said they care about that is outside of case law. I'm being more descriptive than you required. I'll just tell you about Howey if you want, but I'm telling you that you should also care about critical entrepreneurial effort, critical managerial effort, and family likeness test, in addition to Howey. So we'll just talk about Howey, right? Because I guess I went too far.
It's easier for
it's
most
fine.
of the
Yeah, it's fine.
listeners to.
It's okay. So Howey basically is Are you putting your money in a common pool? So let's take Celsius. Did everyone's money go into a common pool? Yes. Okay. Now let's take Hex. You buy Hex. Where's your money go? It goes to someone else. It goes to someone else that had Hex. It doesn't go to some company called Hex. You bought from somebody else. Okay. And now where do your rewards come from? Does someone else give them to you? No. You mine them yourself like a Bitcoin miner. You're the only person in the entire world that can possibly mint your reward. You're the only person that has those private keys that can mint that reward. And so you, through your own computational effort and through your own work, generate your own product, something that never existed before, coins that never existed before. You mint them into existence out of your own labor. So if you look at Howey, it says expectation of profit solely from the work of others. Okay, well, who are the others doing the work? They ain't no company. It's you. You're doing the work. So since you generate your own rewards, it's the family likeness test would state that Hex is most similar to Bitcoin. The only difference is that we use Ethereum miners instead of Bitcoin miners, and we pay you to lock your coins up instead of blow up the environment with SHA-256 mining. But other than that, it's just Bitcoin, the proof of work change. And so it fails like almost it fails like all the legs of Howey because there is no central entity. There is no critical managerial effort or work. If I died and Hex.com went offline, it wouldn't matter at all. Literally, there's 10 other front ends you can use. It's totally irrelevant. Like me and Hex.com, it doesn't matter for the project at all. It launched sufficiently decentralized as well. We had multiple front ends at launch. You know, we have immutable code. So people right now, Bitcoiners attack Ethereum by saying that Ethereum is a security because there's a group of guys that decide things.
Hey,
and
Richard,
they decide, yes.
Yeah. So this part is pretty understandable, and I think everyone's pretty much caught up to this point. That's an interesting take on how you guys does not fit the Howey test, which I do respect. I want to actually focus on the Hex staking a bit.
Sure.
Right now, Hex is offering 40% APY. Where is that APY coming from?
Inflation.
Okay, so in your site yourself, you claim that inflation is the kind of ultimate deterrent for keeping money in the US dollar because the government is stealing from you. How is inflation making new money? And how is inflation here actually increasing the amount of money people get?
Well, it doesn't. That's not where the majority of the gains come from. So Hex's price went up 1,000,000% in under 2 years. That's 10,000x. That's before staking. So if you never staked at all and you bought January 5th of 2020 and you held to like, yes.
That's not answering the question. My question is, where is that money coming from? Let's say if I stake 100 Hex, and let's assume Hex is just like $1.
Yeah, it comes from the same place it comes from in the bank, but you probably don't know how banks work. So I'm going to teach you that in a second too. So
are you guys a fractional reserve bank? I'm pretty sure on your site you specifically said you're not.
No, I'm saying that all yield comes from inflation everywhere. The stock market yield comes from inflation of the US dollar. The yield in your bank comes from inflation from the US dollar. The yield in Bitcoin for the Bitcoin miners comes from inflation of Bitcoin. The yield in Hex comes from inflation of Hex. The yield everywhere globally is from inflation of different things.
I think you're using inflation return as two different terms, and in terms using.
Oh no. Okay, so I'll use the more specific term, monetary expansion. But now no one will understand what I'm saying. Yeah, but no one will understand what I'm saying now because they don't get that. Like they don't know the clinical technology like we do, the terminology.
So let's talk about that then, because how are you actually getting that?
What was that clinical technology?
Because from very
it's more similar to a stock split than it is actual. Okay, people think inflation is bad, but it's actually not. You're gonna love this one.
Richard, a stock split doesn't increase the actual value of the stock. It just makes it easy for people to buy a whole stock. My
Correct.
question, again.
So let's say you owned all the Hex. You owned it all. You owned it all. And then you staked it. And you minted yourself some extra Hex coins. Now, I'm going to ask you, where did your yield come from? Because that's what you're asking me. And it's the answer is that in reality, you just minted yourself some more of what you already had. And so now that's the exact same example and the exact same solution, but you're just adding more people. It's just Bitcoin mining, dude.
So more people coming in is the way that you could earn that API. Let's say I earn 20 extra Hex, just need to sell it to new people for me to get my money.
all speculative instruments have the property that they go to zero if everyone sells and no one buys. The real estate has the property that if everyone sells at once, it goes to zero. And if new people don't buy, the prices go down. Stocks, if new people don't buy them, the prices go down. Everything, life, all human life dies if you don't keep making new kids. Like, life has this parameter that you need to exceed the entropy. You have to export the entropy or you literally die to heat death of the universe. And we do export
I
entropy.
do agree. On a massive scale, yes. And when we over exaggerate everything, yes. But my question is actually right there on the bubble. There is basically the whole thing of, hey,
You're trying to call it a Ponzi because prices only go up if new people enter. But unfortunately, that is everything. That is all human life. That's the stock market. That's Bitcoin. It's just Bitcoin with proof of work change, dude.
Richard, I never claimed Ponzi. It's clear. It's interesting that you said that because I'm trying to ask you exactly what the revenue model is, and you yourself admitted that it's
Well, there isn't a revenue model. It's like the revenue model for a baseball card. It's like, what's the revenue model for a collectible?
For sure.
It's the same question. It's like,
yes. So Richard, I'm not going to insult intelligence. You know what a commodity is, and you know how commodities are priced. How are you a better Bitcoin when the way to
less negative externalities.
And next,
we have less negative externalities, and we're more secure.
But the way Bitcoin is actually minted and the way that Bitcoin is actually produced, that negative externality is what it gives its commodity value.
No, because you could swap the proof of work. No, Bitcoin should swap its proof of work to proof of stake, save the environment, and stop dumping the price every 10 minutes. Bitcoin miners buy electricity and pollution and sell the price down. It's disgusting for everybody involved. It's horrible. We know we've got to.
It's also how its price is determined. But this conversation is not about Bitcoin. It's about Hex. Let's go.
No, but Hex is just Bitcoin with a proof of work change. It's literally the most similar thing in the world to it. We just use different miners.
Well,
we use Ethereum miners instead of Bitcoin miners.
You have a constant expansion outwards. That's not.
No, but look, no. Okay, this is what everyone misunderstands. When was the best time to buy Bitcoin? When the inflation rate was the highest. And after the fucking halvening happened 4 times, it's limp now. It can't even make a new all-time high 5 years later. It's lower now 5 years later than it was 5 years ago. It used to be 20K 5 years ago. Now it's 19K. Why? Because the inflation rate's lower. Because it's too heavy now. So a high inflation rate was amazing for Bitcoin early. It was the best time to buy. Totally centralized ownership, when Satoshi owned 100% of coins, was the best time to buy.
He's asking
when it
how
was
it
had
works,
no
and
liquidity and was listed nowhere, was the best time to buy.
Yeah, look, Richard, we're not talking about Bitcoin. We're talking about Hex.
All those same things I just said hold true for Hex as well.
Yes, but Hex is only a speculative instrument as far as no value as a transfer of value, which your site itself claims.
Yes, it does. It's more secure than Bitcoin. You understand Bitcoin's had 2 critical vulnerabilities where anyone could print as many free coins as they wanted. Hex has had none. And Hex is unlikely to have any because it's more secure.
What you keep on saying is more secure, but you're still relying on the Ethereum network.
No. It's not true because they don't have the same failure mode. Ethereum is more likely to have an inflation bug than Hex is, even though Hex runs on Ethereum. Because Ethereum's consensus code is closer to the node. It's not isolated in its own smart contract. It's not modular. Bitcoin is more likely to have an inflation bug than Hex because Hex's consensus code cannot be changed. So whether they make...
Okay, I think you're talking about security from founders instead of security.
No. I'm talking about attack surface from bugs. The majority of software, the majority of flaws in Bitcoin and in cryptocurrencies in general are inflation bugs. Monero has had an inflation bug. XLM has had an inflation bug. Ravencoin has had an inflation bug. Bitcoin has had an inflation bug. There's tons of inflation bugs everywhere. I'm talking about computer security.
Yeah, okay. Let's stop computer security. Let's just talk about economics. The utility of Hex is you can stake it to get more Hex. Is that statement accurate?
Not really, no. Because that activity on its own, it allows you to delay gratification, which is the most successful investing concept that's ever existed in the history of concepts.
Yeah, that's only if you believe Hex itself is going to appreciate in value. But to do that, the only real utility of Hex is to stake it and earn more Hex.
It sounds like you're trying to disprove proof of work networks. You understand every proof of work network has this property that inflates all proof of networks inflate.
I'm talking about a pure utility level. Am I correct in saying that Hex itself, as the utility that most people use it for, is to stake it and then earn more Hex?
Actually, only 10% of people stake, which is why the rewards are so high. If
Oh,
more
yes.
people stake, the rewards would be cheaper. It's only got a 3.69% inflation.
Yeah, that's actually my next question. If
You know-
everyone stake Hex in a perfect world, if everyone's investing in Hex,
But-
everyone's
hold on.
stake Hex.
There's
it
something
only-
super important. There's something super important. I have to tell you. Not all inflation is the same. If you have no negative externalities and you have no electricity bills to pay and you have no mining companies to pay, then it's just like a stock split. You're just making more tokens for yourself. If you were the only guy that held all the Hex and you minted some more tokens for yourself, that inflation literally cost you nothing. You just wrote yourself some extra tokens. The reason that people don't like inflation is because the people that get the inflation usually sell the shit out of it and hurt the price. That's why people don't like inflation, is because it gets sold.
Wait, so Richard, actually, I want to talk to you exactly on that aspect. What happens in 5 years when most of your stakers are unstaked and get their return?
It's a huge fallacy that everyone has. They think that there's some single point in the future where the behavior of the market participant changes. And the reality that we've measured is the exact opposite. When I first started bragging about how long people stake their Hex, it was like 3 years. Then it was 4 years. Then it was 5 years. Now the average stake length in Hex is 5.8 years. The stake length keeps going up. New wallets keep opening. It keeps working with 100% flawless operation. So you're dreaming of a world where everyone has to end stake at the same time. But in the reality, the measurable world, everyone just keeps staking for longer.
Okay, so wait, I actually want to talk exactly there. Your point is that, hey, look, people were going to keep staking for longer and this is going to keep going. Is that not exactly what Bernie Madoff told to his investors?
I don't know. He never scammed me. I'm not sure exactly how I'm not sure what his sales pitch was. I don't think his sales pitch was that. No, I think we're the opposite of Bernie Madoff. So basically, like your question is like, this is similar to like you asking what happens if everyone sells other Bitcoin at once, or what if no one buys Bitcoin anymore? It's a silly question.
I think you're trying to isolate yourself, and this is a great debate tactic that personally I use a lot. Is you're trying to isolate yourself from the question. Instead of talking about Hex, you're attacking Bitcoin's weak aspects to get aspect of Bitcoin.
They're not
talk
weak
about-
aspects.
Look,
I don't
look,
listen. My stake length keeps going up, but you're trying to tell me like it sucks somehow. Like no, it's perfect. It's what we want.
No, I'm not saying it sucks. My question is, when it comes to Hex, the utility of Hex is you can stake it to earn more. This is straight from your website. And your website has a literal page to describe exactly how it's going to do so, to ask people, say, hey, look, please invest in this, put your money in this, put out like 100 in it to try. It is a risky asset. Your website creates all of those things to specifically say that these are going to be risky assets.
It's just funny that you focus on the 40% yield when the actual yield was 1,000,000%. I think that's hilarious. Your orders of magnitude focused on the wrong thing, but you don't understand that. The vast majority of the gains in Hex are USD price appreciation, not staking.
Yeah,
and only 10% of people stake, but you keep talking about staking all the time. It's crazy.
Look, we're talking about the staking aspect because when you tell everyone that there's a 30% APY, what I know after if everyone 100% people do stake, there's only 3%. That's
no, but the actual APY is thousands of times higher. But I'm just afraid to tell them the truth because it'll scare them.
I think you're also misappropriating because the way you got to that APY, and Richard, I'm just being very honest here, is by other people coming in, believing in exactly what you just said, saying, hey, look, if I lock up my money, it's already did a 20x, it might do 20 more, it might do 20x, it might do 20 more, which constant new investor money coming in, that's
I am the #1 champion of warning people about volatility in crypto. My website says that crypto drops 85 or 95% all the time. My website, this stuff might stop working and go to 0, and you'll be very lucky that it works at all. Like go click the disclaimer on my website, or go click how it works. I'm like I'm the most truthful guy about how risky blockchains are and how when Bitcoin.org gets hacked and it has a scam on the front, Satoshi doesn't do a live stream to save Bitcoiners, but I do. Well, I'm the #1 guy out there trying to prevent people from. It's weird that is the guy that created a yield generating product with no counterparty risk. You hold your own keys. That in a reality where everyone just got bankrupted and lost billions and billions and billions of dollars, I'm getting attacked when I literally built the solution. That's crazy to me.
I'm not attacking you, Richard. And my question is very simple because, again, at the end of the day, this is how the calculus works, right? Let's take it on a very micro scale so we can kind of show all the audience, it's making it easier to understand. Let's say you and I, Richard, you and I Both have Hex. You're the creator, so you hold currently, I think, 50% of the sacrifice. Let's say you hold 5% of the Hex, and I hold another 0.2% of Hex. Both of us stake, and both of us stake for the same amount of time. We're both expecting us to gain more Hex, and the way that we're doing that is by staking. And the way we think that more Hex is going to be valuable is through previous price appreciation. So the way that we're actually going to have our exit liquidity is coming in from new money, new people investing and believing the same thing we are. How is that not a not fair statement? Like I said, and
no, but like I don't understand. So you're framing. No, but you're describing
I'll
a free
I'll leave
market,
it up
but
here
then
so you guys
framing
can
it
see.
as though it is evil.
Thank you so much.
And I
Sam.
don't
We'll
understand
do
that.
for you in a bit.
So free
decides.
market
have exchange value.
Thanks,
market
Sam.
have exchange value. I'm saying that on this specific asset, where is that actual value add, and where is that base value line?
Right.
I'm asking
Okay.
a very simple question.
Okay. Do you care about security?
Yes, I do.
Yes, you do. Yes. Do you understand that Hex is literally more secure than Bitcoin? Literally. I don't think you do.
Look,
I think you hear me saying the words, but I don't think you believe me.
Look, even if I'm taking you at your best and say Bitcoin is less secure somehow, which, to be fair, I'm not a cybersecurity expert, I can't comment on that. I'm saying simply on an economics level, where is that additional money coming from? Let's say 100% Hex is
Less negative externalities. Bitcoin pays billions of dollars a year to blow up the environment, to murder its own price. Hex does not, because we piggyback Ethereum, and Ethereum's already eating that horror, so we don't have to. We pay pennies for security, what Bitcoin pays billions. It's more efficient.
Look, I'm not comparing you to Bitcoin. I'm trying to ask about Hex on a specific level here. Let's say that every single Hex is staked. Let's say every single Hex is staked.
Okay.
And 3.69% inflation happens. Who's going to buy that 3.68 inflation number? It's not going to actually mean you're getting more money. It's just like you said, it's stock split, right? So you're going to have 3.69% more. And my question is very simple here. Does new investors need to come and buy that 3.69% to generate you that revenue?
I muted you, Richard, just because you had background noise. Just heads up. So you got to unmute, Richard.
I'm sorry, it'll be quieter. So it is the reason that Bitcoin's largest gains were when its inflation rate was the highest is because it was easier to on-ramp new users then, because the ratio of new users to old users was multiply. And everyone looks at the demand, everyone looks at the supply side of inflation, but they don't look at the demand side of on-ramping new users. And that is what supply and demand in a speculative instrument is about. We know what the supply increase is because it's mathematically hard-coded within social consensus that Bitcoin is now about, half, it's like 0.79 or something. And then Hex is 3.69. But in Hex, it's delayed so far into the future because you only get paid at the end of your stake, and the average stake is 5.8 years, that it may more than 0.74%. I'd have to do the math on it. And then furthermore, the Bitcoin inflation has to get sold to pay for electricity and pollution and mining hardware, but the Hex inflation doesn't have to get sold at all. It's very similar to just giving yourself more coins because there's no negative externalities. So we have a system in Hex that has shown price performance of 10,000x in under 2 years, that against Bitcoin is up either 200, I think it's up 250x, but it might be up 750x. I'd have to check the chart. If you'd bought January 5th, 2020, it's at 100% perfect, flawless operation. It was given for free to Bitcoin holders. It's the world's first attempt at time deposits on the blockchain, which is a larger market than what Bitcoin tried to address. There's more money in time deposit. And while we do something that Bitcoin can't do, which is monetizing the time value of money, we also do payments better with cheaper fees. We also do interoperability and on-chain exchange better, which is why Hex is the #1 traded product on Uniswap, period, that's not Ethereum or a stablecoin. And it's been that way every day for like months, years. I'm the guy that made Uniswap popular. I carried Uniswap on my back.
Simply talking about the project. Again, my question is very simple. I'm sorry I cut out there for a second. So if you answer this, please tell me you did. My question isn't to compare you to anything else. I'm viewing Hex in a vacuum. is Hex at the end of the day reliant on new investors? And if we want to talk about price action, you're down 96% as of
If you care about the price of anything, every single thing is reliant on new investors.
Yes, okay,
Everything.
look, I
If you
understand.
care about your
Okay.
business, it's reliant on new customers. Everything.
Richard,
You're framing reality as though I lose a point because I'm describing reality. All speculative instruments,
Richard,
all
I wanna
businesses have this
I wanna
property.
talk
All
about
of them.
that exact aspect. So let's just do that exact aspect. So you believe everything would be a Ponzi scheme and a potential Ponzi scheme then? Because as you said before, and
No, you're misusing the word. That is not what a Ponzi scheme means. You're describing bubbles, but then you're saying Ponzi. You have to use strict language here. Okay. Ponzi means there's a middleman. Ponzi has a middleman that screws you and lies about what was going on. Bubbles don't have that. Okay. People can overpay for Beanie Babies. They can overpay for Bitcoin. They can overpay for Hex. Bubbles are just people used to think it was worth more. Now they think it's worth less. And by the way, that particular human thing that the humans do, it's very hard to program that out of them. It's very hard. I don't think you actually can program humans to not engage in bubble behavior. It's part of the human experience. People want it more because the price went up. So they want it more because the price went up. So they want it more because the price went up. They want to pay higher. And when it gets lower, they want to sell it because it's worth less, because it's reflexive system. It's self-amplifying. The number goes up because it went up, and it goes down because it went down, which is why we fall out of the parabola. We go so deep, and why when we go up, we do blow-off tops. So this, I don't understand why Bitcoin with a proof of work change somehow is hard to understand. It's just Bitcoin with proof of work change. We pay it a lockup instead of do SHA-256 mining. We use Ethereum miners instead of Bitcoin miners. That's it. That's it. It's the end of story. It's not hard. It's easy, and it works really good.
Tony, I think dropped out again. Tony, are you there? So while waiting for Tony to join, I'm just going to mute you as well. For anyone waiting, a lot of people are DMing me to start announcing the winners. So while everyone's listening to the debate, and we're trying to bring up Tony again. Tony, when you're here, just speak so I know you're back on. We'll be announcing the next winner on Telegram. So maybe even more than one winner. We'll be announcing winners on Telegram. So make sure you go click on the pinned tweet and on top of the space and join Telegram to know if you won. I'm just trying to bring up Tony. KK, can you try to bring up Tony as well? Help me out.
Yeah, I'm just trying to do that in the background.
Cool. So the first winner has just been announced, just for anyone listening. And for anyone that just joined as well, I appreciate you all being here. We've got over 3,500 people in the space, which is the biggest space that we've had. The biggest we've had before was the peak at 2,600. So I think the audience is enjoying the debate. And I really want to bring up Tony as well.
Guys, this is the last time I'm going to show this.
Further pressing on the question you asked.
Tweet this out, guys. Share this. Who knows how long this is going to stay on? I'm going to stay.
Hey, guys. Yeah, I'm here.
I'm enjoying this.
Sorry, this went longer than expected. I appreciate you being here. So we're going to continue the debate in a bit, but I wanted to take a quick break to go through what happened with Celsius and they declared bankruptcy yesterday and what that means for the markets. I know you've been pushing hard to try to get a bailout in place for Celsius. Just want to see the latest updates with that and where things are at the moment. Bail-in, my apologies.
This is about to get spicy.
Mike is yours, man.
All right. Okay. Yeah. No. So I mean, I did an update earlier on Ivan and Tech. Full disclosure. I think this relates to. Look, I was listening in a little bit, doing some other things on the side. I think the bit that our industry gets wrong across the board is risk management, the risk of these things being securities, and just really managing things. So when I'm investing in this industry, what people do is they tend to say one philosophy, and then the implications is that people hear that philosophy and put all their money in that thing. When really when I'm thinking about how to allocate money, I'm thinking of different scenarios and how I protect from being wrong. And so, we could sit here talking about, Hex all day versus Bitcoin. I don't see that as I put my money in Hex or I put my money in Bitcoin. I see that as what problem does Bitcoin solve and how do I hedge against being wrong? So, when I think about the way my particular way of investing is so that I never blow up. does that mean that I don't have percentages in my portfolio that blow up? No, because we're always get things wrong and things happen. And so when I'm thinking about how to manage, essentially, how do you manage a portfolio? The way I think about it is whatever goes wrong, I'm still okay, and that's how I think about it. So when I think about the dollar, I think about a debt-based Ponzi scheme that requires central bank digital currencies as the last leg in order to take out a lot of the debt from the fact that money is created as banks, and then they shift it to central banks. In terms of effect of that, that's a shift, a slow shift away from free market debt-based money created by a private bank over to, depending on whether it's created as crony capitalism with the government, or it's created by the central bank, and depending on the organization of that, then it's a shift from, it's a different way of organizing an economy from capitalism to communism and the degrees in between. But in order for the dollar system to continue, I will still bet on the Federal Reserve pushing that. And that will be an eventuality. I also know that every fiat currency blows up and will explode. And that's where gold does come in. Gold is a way of managing the transition. Fiat currency was just a token that sits on top of gold. And every 100 years, we have a transition back to hard money after wars and monetary renegotiations. Then Bitcoin is, for me, a way of having digital hard sound money. And then you think about, well, what eventualities do you need to protect from? So Richard was talking about whether you need to protect from proof of work. And so then you look at, well, what's the proof of stake chain? Well, you have infinitely higher risk by having a chain that's transitioning from proof of work to proof of stake. And therefore, you'd expect higher returns or higher risks. And you're hedging against an eventuality. And so how much do you want to allocate towards that type of eventuality and being wrong about a conviction you might have about Bitcoin? Then you think about, well, not your keys, not your coins. Well, people lose their keys. And therefore, custody is a hedge against not your keys, not your coins. At the same time, you want to protect yourself from those centralized institutions and the custodian. And so what people tend to do is they say, look, here is my map of the world. And then they expose themselves to one eventuality. And that's exactly how you blow yourself up. And Celsius is an example of that. Alex Mazinski fraudulently misrepresented what the product was and told them that you should take your money out of a bank and debank yourself. And so innocent people that didn't know how to analyze the risk took all of their life savings out of the bank and put it into Celsius, not realizing that it wasn't a low risk saving account. It was actually a high risk hedge fund, or even worse, a fractional reserve bank, depending on what happens. And as we got the bankruptcy today, we find out that there's $1 billion hole. And essentially everyone was investing in Alex Mazinski's ability and his team's ability to try and unwind a bunch of shit. And that is fraudulent, a big problem. And it's the reason why the Celsius had to go into Chapter 11. And so all I'm trying to say here is I think the big problem in our industry is people coming up with a map of the world and saying, put all your, essentially, people translate that as put all your money into this one eventuality. And then they expose themselves. And that's why we have these arguments, people blowing up and all those things. So if there's any one thing that comes out of this whole scenario is it's a game of risk management. There is many uncertain eventualities that exist in our world.
Super chat. This guy doesn't know how the market
is
works.
one of those eventualities that protects you, gives you the ability to own your own money, spend your own money, and have a fixed supply. Now, if I'm thinking about something like Hex, and again, excuse me, I'm not too involved in the project and I haven't studied it hard enough to know how to analyze it. But the way that I would think about it is that it's a bet on, okay, so you've got Bitcoin proof of work, Then you go higher down the risk curve. You've got Ethereum that's transitioning from proof of work to proof of stake. There's a risk involved in that. Then there's a smart contract that's built on top of that. There's a risk involved in that. And Richard's done a job of articulating, how it's been a flawless smart contract, and it's had audits and all those types of things. And then you start looking, then you have exposure to not just the yield that it generates, but also the price of the underlying token. So are you investing for income or capital gains? And then if it's represented as a certificate of deposit, but your expenses are in one currency, then you're in a speculative environment. And what's happened here is, if you look at something like Celsius started, or it should have, or what I invested into before it completely changed, was an ability for someone that owns Bitcoin to pull out some dollars, so that they don't have to sell their Bitcoin, and it has tax implications depending on your jurisdiction, matched up in an over-collateralized environment. But then suddenly it becomes a high-risk security because they're now investing in multiple things. So you're now investing in fund management. Oh, and then it turns out that the hedge funds and the big people get under-collateralized and the retail get over-collateralized. And it turns out that there's some funds missing. And all of a sudden, you have a complete misrepresentation that causes people literally messaging because they're suicidal, because they don't want to tell their partner that they've lost the life savings and their children's college accounts. So this is why, and we talk about getting rid of securities laws. Securities laws are not about using just a test. A security law is, did people come into this to make an investment? And if so, securities laws exist around disclosures. Are those disclosures made? Do people know what they're investing in? Are they putting through suitability? Is this product suitable for that person? What percentage of it should they do? And this is, financial planning 101. And securities laws exist not just because we said, oh, this is a security, and we've used legal gymnastics in order to prove that it's not. It's to put these different products in categories. Is this a currency? Is it a commodity? Is it a security? From my perspective, again, stable coins, right? What caused all this mess? Well, a central banker came along and said, let's collateralize a stable coin based upon a hugely speculative security called Luna. And when we'll slap a decentralized ticket on top of it, and then everyone is misrepresented into not understanding the risk of it. And then it turns out you can't pull the dollars out of a bank because when it depegs, the algorithm fails and the collateral shit, and we get cascading liquidations because of these different types of risks. Now, so for me, this whole thing about security, non-security, risk, higher risk, is just about us having a higher standard as an industry and disclosing what you're investing into. And then as individuals, we have to hold ourselves accountable for understanding the different types of risks. And if somebody is just a hardcore crook and completely misrepresented, then saying to that person that really didn't have a framework of analyzing the risks and saying not your keys, not your coins, is not really telling the whole story of they thought that they were just investing into a low risk savings account because someone completely fraudulently. Yeah, go for it.
I mean, I've always considered disclosure as a very low bar. So you make some trash, the trash sucks, and then you slap on the website, hey, this trash sucks. So if you get totally wrecked, be cool with it. I think if this is like people that advertise for bad things, like Peter McCormick. I got a debate with Peter McCormick where I said he was a scumbag for trying to take people's keys out of their hands and promoting centralized lenders. And guess what? Some of those centralized lenders straight up rug pulled, and this was like a year and a half ago maybe. And then now everybody rug pulled, and everyone was promoting all of these guys. And
yeah, sure. So let me unpack it, Richard, because you do 1 point, we'll do one at a time. So how people will interpret that is, oh shit, I need to put all of my money into decentralization. Now, how many people rug pulled in these DeFi contracts? And how many people really have the ability to analyze the technical risks, the volatility risks, the yield risks, and the fact that there may just be, all of the things that you say that make Hex better than the other things. Most people just don't have a framework in order to analyze these things. And so there is a place for putting some money with a custodian if there's a regulatory environment that allows some of the known risks in these models to be minimized and disclosed. And there is a place for DeFi. And the worst, thing that happened with Celsius is you take all the good parts out of DeFi, because essentially, if someone takes a private key and they figure that part out, and then they download MetaMask and they figure that part out, and they figure out how to, buy some ETH, and they figure out how to send that to a wallet where you have self-custody, and they figure out how to execute a smart contract and lock it up, and they figure out how to not lose the key. That's a pretty sophisticated type of technical competence to get there. And if you've got there, then great. DeFi's, it's more transparent. You can see the collateral. But then you've got these misrepresentations of people saying it's decentralized that you've always warned against, Richard. And this is where I believe. And then someone comes along, and I believe that there is a great degree of the community that have heard all of your presentations, all of your arguments, and essentially have put all of their money into Hex. Now, that may have worked out beautifully and produced 1,000,000% returns. I don't know how. I haven't put the time in to analyze that. But saying that that is an alternative to Bitcoin is a completely different risk profile, and people interpret these things, and when these things go wrong, that's when securities laws kick in, because securities laws kick in when, oh, I made loads of money on the way up, I don't give a shit, but now all of a sudden I do care, and I contact the regulator, and the regulator will then say, oh, fuck dealing with all these people, let's just allow rich people to do it. So, and that's the end result of all these things. It's cycles. And I don't really know how to solve these things. Disclosure is one way of doing it. Suitability is another way of doing it. But these things just happen in cycles time and time again. And the only thing that we can do is become wiser after each cycle and prepare for different eventualities, and don't put everything into one eventuality based upon, what someone is saying about how this is vastly superior to something else. They're just different outcomes.
Did you invest? I mean, I think I heard that you were you had some. I know. So like Simon Dixon, he invests in the crypto space. So on this call, he probably takes more counterparty risk than anyone else. Probably everyone combined, really. I mean, I think you've been invested in hundreds of crypto deals, like hundreds of crypto businesses, probably.
Yeah, equity, all centralized equity, and yeah, I own shares in most of the major companies in crypto.
Yeah, so he has a unique position in that he endures literally the most counterparty risk of anyone else on the call. I mean, any of these guys can just decide to embezzle, from the company and just do bad things.
But my equity is 5% of my private key value. So I'm just managing different events. So for me, rather than messing around with all of these shit coins, I just invest in an exchange, and an exchange has 3,000 people that work there that have to analyze what everyone is investing in. And when the market crashes, they get fees. When the market goes up, they get fees. And then you end up with a hugely valuable company. Now, can that end up being, something like Celsius, where it becomes fraudulent? Yes, it can. And this is, you don't find a pension fund or hedge fund or anyone in the world. Well, actually, hedge funds definitely, but it's about preparing for different eventualities. So just because I say I invest in exchanges, people will then start interpreting that. And at Bank to the Future, we have to literally get people to take an online test so that they can prove they understand the product. And we have to do these things because these regulations exist, and we take the responsibility very seriously that you shouldn't be investing more than 10% of your income in such in private equity, and you should be diversifying across 10 deals because it's highly likely that some of these will blow up. And you know, that's where I think everyone needs to get to in the end. And it takes a long time for people to learn those lessons and a lot of mistakes along the way.
NF Trade, I see your hand up. You're free to NF Think, sorry. You're free to jump in. You're there, man. You're muted, NF Thinks.
Yeah, so I think I'll take it off with a question with regards to the Celsius.
I think everything he said is useful.
Perfect.
Go ahead, guys.
Simon, so quick question. So the first question that I had for the audience is the actual pinned tweet with regards to the short-term cause of the Celsius fail. And then the second question that I have, and I want to start off with the second question first, is how does the Chapter 11 filing affect your Celsius recovery plan? And were you aware that the team was going to do a Chapter 11 filing as you're part of the Celsius recovery plan?
Could you take it one question at a time? Because I can't remember three at a time. Do the first one.
Let's start off with the Chapter 11, how it's going to affect depositors.
Okay. So when I realized and I contacted Alex Maszynski and gave them the plan that we implemented for Bitfinex that recovered them from the 119,000 Bitcoins that were hacked from the exchange, I realized that he then put me over to Citibank. Then we gave it to Citibank, and I know that Citibank have a executive board that you need to get things signed off on, so they wouldn't have moved fast enough, and that would create a big problem. And then I realized that this wasn't going to get executed because there was actually fraudulent activity happening here, and Alex Maszynski was covering his ass. And when he was started covering his ass, I went public and said, we need to get access to the financials. Once you got access to the financials, we can then put together a recovery plan. And I realized that those financials were not going to come until Alex Maszynski was removed from the board via just having a consulting role by a committee moving over to Chapter 11. And so that was an effort in order to make that happen, because by default, the company was actually split up into three. And then they were trying to sell off the two units in order to hide what was happening in the main unit. And that type of activity was what I was trying to support people in understanding. The transparency can only come out in Chapter 11. So what does Chapter 11 mean? Chapter 11 just means that it's not Chapter 7, which is the eventuality you need to avoid, where they just liquidate everything, create cascading liquidations, shit for the whole market again. Lehman Brothers of crypto moment, and instead move to Chapter 11, where a reorg can be completed. And so at the moment, we're submitting plans in order to support all of those victims becoming equity holders in a reorg of a Bitcoin investment bank that can really get back to the roots of what can be achieved here at the sovereign level. And various other things that are happening. The Bitcoin M&A, some of the things that we've been involved with, and really the lessons are as follows. There's leadership. Alex Maszynski was completely inappropriate to run a financial services company because he didn't take his responsibilities serious enough in making sure that he's representing the product in the correct way and is willing to do things that are out of line of ethics, like dump sell tokens while telling people to buy. The second one is you need to have the regulations right, because these turned out to be securities or it was an unlicensed bank. So those need to be sorted as well. And the collateral at the end of the day, and this is where, becomes important. As you move down the risk curve of these different products, it's incredibly hard to get the risk. You can take a stable coin where you can pull out the dollars. If you can know that the dollars can be pulled out, then that's a completely different risk profile to a stable coin based upon collateralized shit coins. And then Bitcoin's a different risk profile. And then you just go further and further down, and nobody, can manage those risks. Long-term capital market was the smartest people in the room with the highest levels of PhDs that almost took down the precursor to the FDIC system, that almost took down most of the banking system, that required and created the model of government bailouts. basically because no one can manage those risks. So you need to get back to pristine collateral. And what is pristine collateral? Unfortunately, a hugely volatile asset that goes further down the risk curve cannot be compared to collateralizing based upon Bitcoin, just because there may be some technically superior type of design, but a completely different risk profile. These are complicated subjects that we as an industry are trying to allow people to do it in a decentralized way, and also do it in a centralized way with people. And at the end of the day, there's shit regulations and there's good regulations, and good regulations are designed to prevent fraudsters from misrepresenting things. Shit regulations are the ones that make you put all your data on these servers so that they can get hacked and be used for identity theft and
Guys, they're
all
making a
sorts
lot
of
of good
things
points here.
for
Just
you.
remember, like,
But
a
when
lot
you
of the
have these
problems he's
centralized
bringing up are very,
institutions, I
very,
completely
very
buy
legitimate.
into the
But
decentralized model.
he thinks the solution that he has is the
It's
wrong
not
solution,
it's not
in my
all or
opinion, but
one.
the
It's a
questions are correct.
combination of different eventualities and different risks.
Man, crypto was invented to solve this, and it does. Crypto is literally invented to solve this, and it literally does. You just had to use it.
It does, and that's why the vast majority of my stack is Bitcoin on a private key, where I own my own money, spend my own money, and I'm happy with the risk profile of that. And that's also why a percentage of that I'm willing to put at risk in centralized, and a percentage of that I'm willing to put at risk in decentralized, and a percentage of that I'm willing to expect higher returns or lower returns based upon whether it successfully transitions from proof of stake to proof of work, and then there's a use case. But it just goes infinitely further down the risk curve, and then therefore a smaller
The risk
allocation
doesn't come from the
should be
technology, it comes from the
dedicated
buyers
to
and
these
sellers.
solving these problems in your portfolio.
I was saying, like, it's on chain. You don't have to wonder whether a guy's under collateralized or not when you can literally just look at his balances. Like, we can kind of see their balances now, right? Like, there's some website that shows Celsius's actual, like, known kind of public wallet addresses, so we kind of can see how much they have left.
Yeah, the DeFi part people could see, but what you don't know is the shenanigans that happen. So you could say, okay, DeFi, and then that represents to people that everything's on chain. I have a sneaky suspicion, and I know the market manipulation behaviors that people engage in because I used to work in market making at the investment bank, and it's even worse at many of these exchanges. That there is side contracts that sit on top of DeFi where centralized entities are lending things to each other or having side agreements to put things on chain in order to manipulate people to take certain behaviors. So you still can't say by putting everything on chain, you're removing a lot of those shenanigans. You're just having one risk removed and replacing it with another risk. And then you've got the smart contract hacking, and then you've got the underlying chain, and then you've got the transitions that happen there and the forks.
I want to hear about the shady thing. I want to hear details about that, because like that sounds juicy, man. Like, because I understand. So like, okay, I'm gonna expand on what he just said. So there's this thing called like proof of keys, right? And it's kind of like, okay, you're gonna see if the exchange is solvent, but in reality, they could have like borrowed that money or encumbered that money and already like encapsulated it and put it at huge risk. And so even though it shows on their balance sheet, it's not really on their balance sheet. And so I think he's describing something similar to that, but way more juicy and spicy. I'd love to hear about it if you've got any like details. You don't have to drop like real names or anything.
It's just what I said, that you can have on top of the danger in DeFi and on-chain transactions is that people rely on them without knowing that a legal agreement can sit on top in the offline world. That's kind of why it's very hard to have gold on a blockchain, because you don't really know whether that gold is owned and where those types of things. And the same thing happens on chain. And so the shenanigans that happen in our market, that happen in the traditional markets, they're never going to go away. But it doesn't solve, it solves one problem and opens up another attack vector.
Can I ask you how much more cascade risk is there, do you think? Like how many other like lenders haven't gone under yet? Or like, I'm trying to guess because I use these to modify my bottom call, right?
Yeah. So you're right. The bottom call would be based upon the centralized entities' counterparty risks at the moment. My belief is that a successful Chapter 11 reorg would prevent liquidations if it moves into chapter 7 or liquidations. Then I believe that there's a lot more counterparties that would fall out and be shaken out in that situation. And so we are literally, as a decentralized industry, dependent upon this connection between the centralized and decentralized. And I don't think there's any way of getting around that. It's kind of like, look what's happening at the sovereign level right now. So, Bukele says, okay, I'm gonna buy some Bitcoin, and we're gonna create a securities market based upon Bitcoin, and we're gonna have Bitcoin-backed bonds. And then Sam from FTX comes along and said, no, do it all on a shitcoin, and then creates Aurora coin all over again. And we know that always ends badly. And then he goes to Africa and says, let's take the people that have been most shafted by the British colonial system that stole all their gold, and their silver by literally creating agribeads and inflating away their currency and selling them off as slaves. And let's do that again with shitcoins. And then you've got other countries that are saying, let's do it at the central bank digital currency level. You've got these three intertwined things. And the key thing to all of this is the fact that we now have choice. And that's what I think the most important part of this is. So when people are saying, when we're debating here, it's all about, if we can give people an exit from the traditional financial system, an exit from DeFi, an exit from centralized custodians, then you just need to manage those choices. I still use fiat currency a lot, because I know so many people that they were involved in Bitcoin from the early days. They didn't get wealthy because they had to spend it as they go. And so you still need fiat currency in order to manage just the normal risk management of how do you manage your life. Now, and that's essentially, what I'm trying to say here.
Wait, Simon, just a quick question on the Celsius part.
Yeah, let's get back to the Celsius, sorry.
Yeah, it's clearly that they're acting deliberately and they falsified a
So
lot of their claims.
I believe the answer to that is literally, if the community puts together the bail-in solution that we're proposing to Chapter 11 right now, and everybody becomes equity holders in the proposal that we're going to be putting through. And if someone else comes up with a better proposal, that then Chapter 11 will go through and no cascades. If it turns out that these solutions don't get through Chapter 11, then I think you'll move into liquidation of assets and cascades.
Getting through Chapter
really
11,
the courts are going to decide
easy.
whether what the price of the industry is.
With the thing like
Simon,
Celsius.
you think that Alex went into this entire thing with these intentions?
Absolutely, mindlessly.
I just want to focus on solutions right now, but I will give you
No, and I'm all about
mindlessly. He went into this.
The regulators,
yes.
The regulators and the lawyers will determine that. That's not my job, but I believe that applying the same rules of how you grow a tech startup to financial services, it can often lead to completely inappropriate leadership. And if people don't take the responsibility seriously, it's kind of right. Dogecoin, a classic example. So it's created as a joke. The economics are horrific, and then the leader of Tesla, Elon, just thinks it's a good idea to just start talking about it, and then people make financial decisions based upon that. There's a certain level of responsibility that we need to understand, and sometimes shit gets out of control. So my personal belief is that Alex had the type of personality where you're involved in the startup world, and in the startup world, you essentially have to over-fabricate the truth in order to get VCs to invest. But in the financial services world, you should under-fabricate the truth, just so that people are over-disclosed. And if you take somebody that comes from the other mindset, and doesn't respect the types of compliance requirements that are going to come from running a regulated institution, you're going to end up with this shit. And so I think there's a certain point at which you say, I am in over my head, and these mistakes have been made, and I need to fess up and tell the world that these mistakes have been made. I think that if the bank run didn't happen and this was allowed to get bigger and bigger and bigger, then it would have just got a lot worse and more financial loss.
Simon,
No, yeah.
What do you think about the 70,000 Finex hacked coins? Are they going to get given back to Finex or dumped by the feds? And what do you think about the Gox coins? 142,000.
Well, I guess we could just look at the model of what has happened, and those. So the Finex ones are going to be given to Leo token holders and those that invested in the bail-in.
But you think the government's going to give them to Finex? Because I thought the notions were they were trying to sell them. I don't know.
Now this one's a really interesting one, right? Because on one hand, there's DOJ trying to settle, and on the other hand, there's DOJ that's got a bunch of Bitfinex assets. Now, do I have faith in governments that they won't manipulate that scenario into their benefit? I've seen some really mafia style of behaviors from governments and regulators. But I do believe that it's more likely that the DOJ is going to be giving those back and they will go to the token holders. But I don't have much faith in governments doing the right thing as well.
What about Mt. Gox coins? 142,000 Mt. Gox BTC.
So you've got forced hodl for 8 years. I think it really depends how many of those people became wealthy in that time versus the ones that just gambled it too much and didn't end up in a much bigger financial position.
I got a funny anecdote for that. So Mt. Gox leaked their whole list. So if you wanted to, you could just actually cold call the list. And I can't tell you how I might know this, but everyone's wrecked. So like everyone on that Gox list is broke as fuck.
Yeah,
like almost everybody.
That's what I wanted to know.
And we saw that in a recent exchange that blew up based upon someone we thought was very wealthy that apparently has been liquidated. So,
bro, there's no way Roger's fucking wrecked. I know, it's crazy, that real? Right? He's got fucking XRP founder status. He's got fucking BC. Well, okay, wrecked on BCH for sure. I don't know. Like, really, Roger wrecked? I can't fucking. That would be mind blowing.
Can you expand this? Can you expand this for the audience for anyone that doesn't know?
Jerry Springer.
I like Roger. He's like pro freedom and shit. So I'm not gonna like savage him based on fucking like hearsay. But I could tell you what the hearsay is, I guess. So like Roger is like arguing on Twitter with Coin Floor or Coin somebody. I don't know.
Mark Lamb from CoinFlex.
Okay, and they're like arguing over like 40 or 60 million or something, saying each one of them owes the other one, and well, one of them's lying, I guess.
Yeah, I find it very hard to believe that Roger could be wrecked. I find that hard to believe
because I don't think he's like a take margin kind of guy.
We're talking about Roger.
Why would you?
You know which Roger they're talking about, boy.
You're not talking about Roger Ver, are you?
Yes, we are. Yeah.
Holy shit.
Roger Ver, Bitcoin Jesus.
Yeah, but for anyone,
man, fucking, you know,
so
this is amazing content.
You're chopping up Richard, but for anyone that doesn't know Roger Ver, a lot of the people that joined in the last couple of years been in this space for a long time. The founder of what was Bitcoin's fork called? What was his?
You don't know what Bitcoin
chopping
Cash
in and
is?
out.
It's called Bitcoin
Richard,
Cash.
you're choppy. Basically,
For
invested
anyone that
in many
wants
of
to
the early Bitcoin startups. So we co-invested in blockchain.com, Kraken, Ripple Labs, the company, and what other ones? He missed Coinbase. We got Coinbase.
Okay.
Yeah.
He's also the CEO of Bitcoin.com. And he's the. I remember back in the day he was a big proponent of Bitcoin Cash. It was a battle between Bitcoin, or it was like Bitcoin Genesis, which is the Bitcoin we all know, and Bitcoin Cash. So Roger being insolvent is hard to believe. I don't know. Are these rumors starting?
Well, no, that's what the exchange is claiming. the exchanges. But then he could just be saying that because, this is just Jerry Springer for Bitcoin. No one knows. This is just agreements and tiffles and centralized institutions, and that's just what it is.
So you said that this cascade depends on what happened now with Celsius and
Yeah.
Chapter 11 proceedings. So how long will that take, and what should we expect? Because the markets seem to be, I wouldn't say stable, but stable-ish. What are investors pricing in?
Again, I don't really do short-term trading, and I never do price calls. But at the moment, it's just the outcome. I think within a couple of months, we'll know whether that's going to be a successful reorg. I'm confident that there's a great outcome that can be achieved, just like it was for Bitfinex. There was a really great outcome. That was one of my best investments. And I believe that there is Celsius, the company, can't exist anymore. It's too much shit in that. The board can't stay. They're engaged in too many bad activities. And the model of using collateral of multiple types of risks, there's no way that anyone can manage those risks.
Simon, by the way, quick question before we wrap up the Celsius segment and proceed to the next point. So for the audience as well, just so that they can understand the short-term cause, is Lido's stake death, the depegging of Lido's stake death, the key reason as to why everything went to shit initially?
Oh, well, the first one was, there's multiple that happened over time. I mean, firstly, it went from a peer-to-peer model to 6 different types of yield. That turns it into a fund. Then you're like, well, what are those different types of yield? And then there was the ST ETH. Then there was Hacks, Badger DAOs. Then there was Luna and whatever came from that. And then there was exposure to under-collateralized, centralized hedge funds. And there's a plethora of other things. And then, the fact that a lot of the collateral was sell. So people were actually borrowing against sell. And then using that in order to buy more sell. And then as the market crashed and there's extreme low liquidity, you're ending up in your collateral is an asset that you can't liquidate. And liquidity is a big part of why you should be what you should be considering as your collateral.
Simon, just a quick question there. Do you think that Mt. Gox coin should be released, I think, in August 1st, right? What do you think the markets are gonna? How do you think the market's gonna be affected by that? I don't know if you already answered this.
I didn't answer that. Yeah, you'd expect a lot of liquidity to hit the market. I just don't really care. I'm a DCA guy. I don't trade. I just buy every month. It's worked really well for me for 10 years, and then I prepare for different eventualities, so I never get wrecked all in one go. It's just quite simple for me. I don't bother trying to predict these short-term trends. I know lots of people do. My experience is the people that do end up in a worse position than those that just took a longer-term approach.
Cool. I appreciate the summary there. I think we can move on from the Celsius segment. Tony, are you still there? Did you have any further points you wanted to make? Because I know you dropped out earlier.
Yeah, sorry about that. My internet just kept on kicking me off Twitter Spaces as a speaker. Is Richard still here? I would actually love to continue a conversation with him. I didn't get the chance to finish the line of
he dropped out. He dropped out. He was on the move. He gave his final thoughts. So do you want to give your final thoughts on the matter on the Hex matter?
Yeah, he gave his final thoughts. More like you dumped him off the stream, boy. It was getting too hot in here, boy.
Hex is by
it was getting too hot in here, boy.
More Hex. The only way that people make money on that is by price appreciation of Hex, which is from new investors, and new investor buys into Hex, and that cycle keeps on going. I think it's very similar to Terra when it comes to its tokenomics. I think it's very similar to
dumbass motherfucking dumb fuck. And I hate this fucking loser. Fuck this guy. Block his dumb fucking ass. Luna and fucking
you're gonna have these 10x returns. You're gonna see
incorrect. They dumped Richard from the stream so they could talk shit about him.
When coming to this,
fuck this guy. Fuck this guy.
said. He
Zoom in
hasn't
on this guy.
answered,
Clip
but
this
I do
shit.
also think that he
Tony
didn't really answer
Wu,
a lot of my questions
big
on whether,
fucking
hey,
dumb
look,
dumb bitch.
are these things going to
I
be
hate this
productive?
fucker.
Are people still going to be using Hex? What's the actual utility of Hex except for just getting more of it? I think these are some answers they never actually
You'd
answered.
send it to
There's
someone, dumb fuck.
I would love for them to respond to these. And honestly, having a conversation with that guy's intelligent, would really want to keep on speaking to him at another date. But yeah, those are just kind of my final thoughts. Just be careful when you're investing, and to be honest,
That was your last shot,
a bit
Tony
too
Wu.
much,
You're done. I'm going to Twitter
on the
right
conversation,
now.
just
Tony
personally
Wu
speaking.
is a dumb.
And I think, so I know you tried to speak earlier. I saw you unmute and put your hand up as well. I want to give you the chance to unmute.
Fucking Tony Wu.
You there, bro?
Tony Wu.
All right, cool. If you want to speak again, and I think somebody DM me, just feel free to unmute. But otherwise, just to refresh the room for everyone that joined, and KK will be going through the agenda again. So we've had
I'm cooking.
almost 20.
I'm cooking.
Okay, man. So while you're cooking, so we've had over, I think, almost 20,000 listeners come in and out of the room so far. So it's been incredible.
Hey, do you mind if I'm
incredible.
going to drop off because I got a flight to catch? And is
All
there
good.
anything?
Yeah,
is there anything
Simon.
you wanted me to do before I go, or any questions? Or,
No, I'm all good, man. I appreciate you being here. I think it's always good to have you come in on the segment of, mainly Celsius, but also the liquidations that we've been facing. I want to end it with one last question. I know we touched a lot on Celsius. Is there potentially another round of liquidations? Does that depend on Celsius? Could we expect more carnage, or Sam Bankman-Fried was saying earlier that the worst has already come?
Yeah, I would agree with that. I think the Celsius outcome is important, and the Voyager outcome is important. I believe that there's a bunch of insolvent exchanges out there that figured out how to survive it. But there's I think I think everything is on Celsius and Voyager from here, and if those don't go the way they should go, then I think this going to expose a lot more shit.
Voyager already got liquidated to zero.
That's my best forecast from here. I'm gonna drop off now, but I'll be giving updates on my Twitter and my YouTube with my name until I'm on. There's a certain point where I'm going to have to be under NDA. So my goal was to just release as much information, as much education, so that we could just forward the conversation and people could understand some of the types of dynamics. But eventually, I'm going to have to go under NDA and go back into silent mode.
When are you going under NDA?
Lawyers are negotiating it at the moment, and we're just trying to make sure that I'm able to still be a bit of a voice and discuss certain things, because I don't want to go fully silent, and what things I can't discuss and can discuss. So that's negotiation.
Celsius, dude?
And we'll see how those goes. But I'll probably be a bit quieter at some point next week.
Cool, appreciate it, man. Appreciate you being here. We'll bring you in next week as well, if possible. Not next, next week's show. Just get an update on the Celsius situation and where the markets are at in terms of liquidation.
The Simon guy.
But appreciate you being here, man. Have a safe flight.
Okay, cheers, guys. Bye bye.
Fuck.
Cool. For everyone still here, so I want to tell you that the first winner was
What do you want from him exactly?
First time we have $10,000 giveaway.
I just want to know if he was a Celsius guy.
No, he was the investment banker guy. But yeah, he's the guy behind the bailout.
A few weeks ago, I think on our first episode or second. So the first winner was announced on Telegram. To join, check the pinned tweet, join Telegram to see if you were announced. Make sure you follow all the speakers. Follow the speakers, to know when we're running the next space. And a lot of the speakers run their own spaces. But also, if you want to participate in the $10,000 giveaway, you must be following all speakers, and you must be, again, check the pinned tweet. Now I'll announce the second winner. So the second winner is.
By the way, Mario, do you know how many
pull this down, boy?
cups of water for every cup of rice?
No,
that's a bad joke. Don't worry.
Okay, that was a shit joke, man.
By the way, I can tell you, it's just up to your.
You can pull this down whenever, bully.
That's correct.
I just sent Tangent a link. I don't know why, but I'm going to discuss just for a second some of how that went. If Tangent wants to hop on, come on up on here. If you listened, that was a really interesting one. I lost some IQ points listening to Tony Wu as well. Fuck Tony Wu. Tony Wu will get silenced online due to me. Freaking dork. Everybody retweet this Tony diss. Let me send this out. Give that a retweet. Let that go viral real quick. We want to make sure that everyone knows that Tony Wu is a woozer. That's for certain, guys. Let me read some chats for a second. Anyone who wants to interact, throw a chat down. I want to look for a second. I missed that while I was ranting. Absolutely ranting. BTC Cash, man. Yup. Roger that. Funny stuff. Woo guy does not know how S works. Oh, guys, we got a special guest. I'm going to give him a second to get a little rounded off so he can not dox himself. And it's 2 a.m. in Perth. And we have a little Perth collaboration going on. BTC versus Hex. We just saw it. Bunch of random guys versus Richard. We're going to talk to a guy real quick who had a little debate with Richard not too long ago, guys. Very interesting timing. I want to talk to him more.
Like this.
Maxie.
Yo, what's up?
What's
Yo,
good?
I only caught the end of that. Like,
Dude,
so I only saw,
dude, you missed the craziest conversation that I have listened to in a while, and it was
really
3 hours long.
Holy shit! So I
And
only
they
got
let
from when
Richard
Simon
speak.
Dixon was basically like on a real long rant. Like,
No, there was a bunch of them. It was a bunch of different topics. It started on NFTs. So they were basically talking about NFTs. Richard gave his whole point. They all went full liberal, lost their shit. And then everyone calmed down when he said he was making an Enigma 5. He was going to mint 5555 Enigma NFTs. He said, I'm going to take over the NFT space. He literally said it. He said, I'm going to take over the NFT space.
Whoa.
And he was
Plot
like, if those motherfuckers don't like me, then I guess it won't work out, but I'm going to fucking see what happens. Basically what he said. He's like, I'm going to give it. So I already DM'd him about the whitelist on that. And then they got in. Then a guy came up, tangent. So this guy came up. This was totally off the cuff. They were just going to talk about Bitcoin the whole time. And no hex talk, no pulse chain talk at all. Zero. This motherfucker comes up and he's like, I want to debate Richard BTC versus hex. Like legit.
And was that Simon or someone else?
I think it was someone else, guys. Clarify me if I'm wrong, because I was mainly just listening for the most part because I was trying to keep up with these super brains while they were going. But it was some guy, and he was very open-minded. Like he didn't come at him sideways. Okay. Initially, at the end of it, basically Richard got dumped from the thing for like the last 20 minutes, and then they compared Hex to Terra Luna. Like,
is that the dude? So that's the dude that signed off there. I wanted to request the mic and just answer his question and be like, dude, the answer to your question is that your accusation could be leveled at Bitcoin as well. To say,
right.
Like,
so tell me about that. I'll just ask you the question for the audience because I know what the question is. Why?
His question was basically,
everyone was asking was,
what
do
is
you
the
need
utility?
more buyers? Do you need more buyers? Tangent. That was the whole, like the ethos of the whole middle part of it was like, the guy was like, you need more people to buy. And he was basically like, yeah, no shit. And he said everything's like that. But the guy just kept saying he just wanted to bring up this Ponzi shit. And he never said Ponzi, but the whole time he was just like, you need more buyers. What is all you do is stake it. All it does is create more hex, blah, blah, blah. So
basically, I think what he was really asking was, what's the utility? And you're right. And we've heard Richard answer this adequately in the past in terms of like, do you need more buyers? He's basically saying, if you look at any asset that you buy and you hope that it goes up in price, then it always needs demand. So it's a framing thing. To frame it as, oh, you need new people to come into the system for the price to go up does make it sound like a Ponzi, but that's not inaccurate.
It's just a frame.
Sorry, that's not accurate. That is inaccurate. So basically, the difference between that, which is true of Ponzi's and non-Ponzi's, just true of regular assets and Ponzi's. The difference with a Ponzi is the fraudulent story behind how it's going to make the money. So Yeah, look, supply and demand. So if they're claiming, if they're trying to basically debate,
There's more
like,
people,
they're basically saying, yo, supply and demand is a thing, and Richard's saying, yeah.
And that happened like an
but
hour before they
think
finished the conversation, though. He meant like he went straight to the nuts and bolts of it and said commodities, everything, blah blah blah, houses. He brought it all up.
I think the accusation that needs to be answered is the one of what is the utility? Why would someone be like, in terms of still discussing the demand side of it?
But why do you need that utility?
Why, like, what is going to create that demand? Why does someone need to buy hex when all that can be done is staked to make more hex? Let me finish this thought.
No, yeah, I know what you're saying too. This is good.
So basically, the answer to his question is the same with Bitcoin. So the utility that it provides is the ability to have censorship resistant value storage, transfer, and transport. Now, transfer and transport are actually different. And I learned this from myself going back through a list of things that I'd made, because I made that video recently where it's like my crypto golden rules for crypto noobs.
We'll
and
drop
basically,
that link below.
Thanks. So basically, transport is when you're retaining it as your ownership, but you need to move it. So i.e., if you move and live in a different country, you need to transport your wealth with you and transport your shit, like your belongings or your wealth. So that's transport. And transfer is when you transfer it to another entity, to another person or a company or whatever. So it's both. So crypto is incredible at both and has censorship resistance built into it for both those. And if you're not doing those two things, you're just simply storing it. So his accusation, or his like accusing sounding question, or criticism / question that is intended to be a criticism, can be leveled equally at Bitcoin. What is the utility?
A little unplugged from one angle, I can tell. Just like one of the outlet, just a little bit. Yeah, you're good. It was just popping.
Oh, maybe it's over here.
It was barely though, and everything you're saying is amazing. Sorry for breaking it up.
So yeah, no, that's cool. So basically, if that person believes in Bitcoin, then they shouldn't be leveling that accusation at Hex, because it's the same. It's the same answer.
Yeah, exactly. And that's it just comes down to social consensus, which gets a little ugly when you start thinking about it morally, is kind of what I'm getting from what you're saying. And morally is the wrong word from it, but maybe like strategically, like the best strategy to get to A to Z is sometimes ugly. It doesn't look great. It's like Richard's going in there and talking shit, saying statements that he doesn't need to mention Mashinsky. It doesn't get him any more followers. It doesn't. I'm telling you, he's shitting on these guys his whole life. It's just an adoption thing. And the conversation went there. At the end of the day, it's about, well, who's clicking what and how many of them and why. And if the why is because whatever, it doesn't really matter as long as there's some sort of future value proposition there. And with Bitcoin, it's the same, right? Like guys like me don't like talking about Bitcoin or buying it that much because, to be honest, I ain't never made enough money to really care. And I just don't think the Bitcoin gains are that high. And that is literally my major point. And I think people would know that, right? Like once you get a little savvier in crypto, you realize some things, right? Like I'm not going to invest my whole life savings to get a 3x. That personally, like that's just where I'm 28. I'm a little bandit boy. You know what I mean? Like I'm running around doing whatever I want, buying hex.
Just a youngin'.
Yeah, and I'm having a good time. So like my game plan, the use case is different a little bit. It's just different. But again, when he starts talking about the pollution and everything, whether or not it's 0.0000001% or a high number, which we all know it's not, it is still a point to be made that the miners are kind of incentivized to dump, right?
Yeah, I didn't actually hear that part of the debate, but
just
I will
normal,
admit,
just like normal. Like he just mentioned, whenever he mentions that, I kind of just don't know enough about that topic.
Who said it? Was
Richard always
Richard?
mentions
like
the
proof
not the
of
pollution,
waste,
but the
kind
miners
of.
dump the price. Miners dump the price. And I don't know enough about mining to have any insight there.
Well, I guess my counter to that would be the same thing happens in Hex now. The people who were rewarded to hold the price up by staking, when their stakes expire, they can dump that yield that they got on top, so they can restake their initial and dump the yield. So it happens in Bitcoin and in Hex that
they dump more than that when they make major gains. Like,
and that's not my analogy. That's Richard's own analogy to say that the similarity in Hex, the parallel is, instead of mining, there's staking, and they're being paid to hold the price up. That reward can also be dumped. So
it's just a little bit less negative externality. So it just seems like, for what he's saying, let's do it for a more like unbiased conversation. Why is it a little more efficient?
Well, he's just saying it doesn't burn energy to do it.
Right, but in general, like, not even the energy part, more efficient, like you can get to A to Z without more work, with less work.
But if we care about the price, if we ignore the environment and we just care about the price and
because I think the environment is
dumping the price,
it's negligible.
Then I agree that yes, miners can dump the price, but also Hex stakers, when their shit comes to maturity, can also dump the price.
I would dump the shit out of Hex if I had a fuck ton. I would dump the shit out of it, dude.
I wouldn't admit that to the Hex community.
Come on, I'm trying to fucking pay for a $4,000 car. Like, yeah, if I had a bunch of fucking Hex, I thought it was going to continue to go up, and it survived more market cycles, I'd dump the piss out of it.
Yeah, look, I always thought
people need money too right now. It's not the bull market; it's the bear market. People want their money.
I always thought it was inappropriate when some members of the Hex community started getting weird about whether people were selling and who was selling and whether these big dogs were selling and stuff like that. It's like you have to allow people to do what they want, and you can't create a deal with everyone. Like, hey, how about everyone doesn't sell? Like, no one sells. It doesn't work like that.
Yeah, like that's already in the contract, guys. The people that stake could stake, and the people that have liquid bags want to dump it because they want value. Like, when did that change? That people want value? Like, if I think Hex is going to go up another 1,000 fucking X in price, let's just say 1,000 X in price in whatever amount of years. Are you serious? Are you serious? If I had 1,000 times what I have in my shit right now, I would dump the absolute piss out of it. Right now, US dollar is so valuable, and people are hurting, including myself. In whatever way hurting is to everyone else a little different, but you know what I mean?
Yeah. So one thing I'll allow, and this might sound like I'm contradicting myself, but it's not, is when someone does dump, and so that like it's publicly known wallet wise from the pseudo anonymous side of it, that you're like, this wallet address dumped all their coins, etc., and then the price goes up after that, I'm happy for the Hex community to be like, this guy dumped all his coins and now it would be worth twice as much, like that, and highlighting that loss of potential gains. I'm all for that. That's great. I think that's good
now.
But shitting on people for selling at the time and being like, oh, you shouldn't sell and stuff like that is nonsense.
People kept mentioning Steph and Gunther and shit, and I was like, guys, please, these people have children, probably. Like, for fuck's sake. Like,
yeah. You don't know someone.
Dude, if you have kids, take all your shit out and fucking protect your damn kids if you need to, because 2 years is a long time if we're down, and you're free as a bird, Tangent. Like, we ain't worried about you. You know that if you had a problem that you could get rid of some overhead, probably, right? Like, you could probably make a million things happen before you had a problem.
Yeah. I would just go on the dark web and hire an assassin.
The people that find Hex, though, so I'm trying to think of myself. Like, if I sold a lot of Hex, like, to be honest, most of it would still be in USDC, probably in my wallet. Again, like, when I say sell, I don't mean like I'm coming to buy shit. Like, I just mean like transfer to USDC, usually kind of what I mean. And I just meant that in the point that, like, I know the market's going to go down. Even if it doesn't, that's how people get wrecked a little bit. But this is the first like major bearish shit that has happened to Hex like ever.
Yes,
ever. It's a year and a half long now.
In terms of duration, and that's the thing I wanted to try and highlight to people, is because people were like being like, what's the problem? Hex has dipped this much before, like roughly in percentage terms.
It was a bull market.
It's the duration and the price. It's the drop in price and the duration that you factor in when you're talking about like pain, basically, like market pain. So we haven't had this before in Hex. This is the first time that it's been incredibly painful.
So I want people to be careful when they're buying shit too. Like this is a good time to dollar cost average in. Yes, of course it is. Stake some, but don't over leverage yourself at all. Not even a little bit. You can't even a little bit in times like this. You can only put money in there that you really don't want to see for a minute, like a year or two, 2 years, 3 years, maybe. That would be, if you're thinking this year you're going to flip something on Hex, you're absolutely at. I mean, I'm not saying like there couldn't be price action by the end of the year, of course, but I mean, like if that's your goal, like I wouldn't line up for that team. And that's me personally. But as I learn more about the market, I realize things are unpredictable as well. Like things can shoot up and do weird shit, and whatever happens, it's always the opposite and blah, blah, blah. But again, it's a good time to dollar cost average in the Hex. Of course, amazing. That's all I'm doing, to be honest. But I think it's important to understand your scenario that you're in. Like, everyone's in a different scenario. And I think that's kind of what doesn't get highlighted. And if I had a big bag of USDC, to be honest, I'd probably buy back Hex with it, like most of it. Like, so that there's that part too, where guys are just timing the market because they have more information,
Dollar cost averaging is so powerful that you can actually do it at any time. There's literally never a bad time to dollar cost average, particularly when you look at how quickly crypto moves. Like you said, the pain is usually only on the order of like between a year and 2 years. And like Richard said, that's not a long time unless you're really suffering, like unless you're really having a rough time, then obviously that would seem like an eternity. But as assuming that you're just on your crypto journey, that's not a long time to wait. And so even if you started DCAing, right, at the very, very top of a bull market, and you said, okay, I'm going to start DCAing into a coin that I believe is quality, and that's key. It has to be a quality coin. And then you started DCAing, like say every week, you're like, it's 100 purchases that would be for 2 years. And you would have gone through the entire bear market and be back into bull mode and have your entire bag stacked, bag packed, ready to go. That's how powerful DCA is, that you could literally do it start at the worst possible time, i.e. you're starting to buy when shit is maxed out, and it's still fine. I think you might be muted. You're muted.
I just sent a link for your YouTube
to me
to Rags to Riches YouTube chat. So I don't know why I did that, but he's going to be like, why is this dude
by accident?
Yeah. Like I just had a bunch of streams pulled up and I just commented it down right now. I was like, maybe I can erase it.
I should actually clarify something, because there is actually one thing that you could do. Like there's a start time that would be worse than that. Theoretically, would be that if you started DCAing as you were heading up to the peak and basically averaged your buy-in over the peak and then went into a bear market, so that your cost basis is high because you've just averaged over the peak and then it's gone down. But even then, if you did it like that, your cost basis won't be the top, which is the people that are in the most pain at the moment. Let's use Hex as the example. Are the people that went they went all in, or a relative equivalent of going all in, right at the very, very, very top. So at least if you were DCAing over that period, your cost basis wouldn't be 40, 50 cents. It would be like maybe 30 cents, or it would be a lot lower because it would have averaged across the peak, not just buying in at the peak. So DCA is, I think, very underrated, and I've been actively promoting it more and more.
It's the only way I've ever invested. I never learned any other real way. Like I just learned Bitcoin and then Hex, and it's like, I don't know what else to do, right? Like I don't want to over leverage myself. I don't like that feeling, like I don't like the feeling of thinking that I spent too much money on something at all. And that was an amazing stream. I've been streaming for 3 hours and 14 minutes, longest stream I've had in a while.
Damn.
But it was absolutely incredible. The whole time I was just sitting there.
So you did a watch party for
the whole time. I didn't
Spaces.
say, I said, but just a couple statements like within the 2 hours, and it was incredible. The chat was absolutely electric, guys. Thank you so much for making this awesome. This was a great stream. I didn't have to work too hard, and I got a couple DMs off, which was nice. We listened to that whole entire thing, and that was absolutely incredible. And I don't say that about shit. Like I think everything is lame ass shit. That was a good ass debate conversation.
I'm gonna have to go back and watch it.
Oh no, it was money. Go from the start, dude. Just right when they started.
I saw it was being recorded, so like I definitely should be able to get it.
And if it's not recorded, then we got you can just watch.
Oh yeah, someone will absolutely. Oh yeah, true. It'll be in your stream.
Then this dude, yeah. And then after everyone left, he compared it to Terra Luna. Like, how could you ever compare Hex to Terra Luna?
Yeah, it's not, guys. It like so.
That's
if there's
some
anyone watching,
dumb ass low blow shit that he did at the end of that here.
If there's anyone watching this stream who is not already a Hexacan, which is obviously that will be a small number, relatively speaking, let me impress onto you that those comparisons were so wrong. So he said the other one was Olympus DAO. So he said
oh my god,
he said it's got the tokenomics of Terra Luna and the something else or the other way around. But basically he made those two comparisons between Terra Luna and Olympus DAO, and they are both so wrong, so wrong. Hex is nothing like those projects. So
nothing even close. Like again, guys,
yeah,
when it comes to
can't
people
even
telling you
see.
about Hex, that's the one thing he did mention that is hard. Is like the learning curve is hard. Like they mentioned, like it takes a while, like to get a smart contract, to know you need your own keys, to know you need to do all this stuff, to know everything's a rug pull. So guys, if you want to be safe every single day, just watch this channel, watch Tangent's channel, stay involved, stay off the drama on Twitter. You know me, guys. Tony Boo comparing Hex to Terra, tokenomics wise, what an absolute asshole. Once Richard Hart left, of course. Tony, you're wrecked. Guys, go ahead and retweet that. I will
yeah, let's retweet that. Oh, yeah, that's your tweet. Yeah, hell
yeah,
yes.
let's get a retweet. I forgot I did that out of anger, like mid. I screamed and I was like, this effing dude's a piece of effing ass, blah, 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 blah. So guys, spam
doing it while
retweet
Rich is
that.
not there is also pretty dog.
Yes,
it's like
right at the end, like they booted him because he was talking about Roger Ver losing all his money, and they were like, nope.
By the way, actually, I've got a quick comment about that. When Richard says Roger Ver wrecked, like, sure, if that's happened on a relative scale compared to where he was and what he was worth, yes, but don't cry for him. Even if he's fully wrecked, he'll still have more money than all of us.
Those guys
together.
can't
like,
get fully
still.
wrecked.
It's like yeah, because he would still
when
have,
you're so
he would still
tied
have a
in,
massive stack of Bitcoin Cash. He would still have some Bitcoin. He's on a relative scale, he'd still be upset because if you perceive your wealth to be like Ver would have been, I guess, in the billions, I guess, at some points. So sure, going from being a literal billionaire on paper to only having, say, 10 mil, 50 mil, you'd be sad, but you're not starving, right? You can still afford to get extra cheese on your Whopper. So it's fine. Like, as in,
yeah,
don't
those guys have money coming out of every orifice in their body.
And Ver has the ability. So you know how some people, because they're famous. So look at celebrities who have like got drug addictions or for whatever reason have like smoked all their money. Because of their fame, they are in a category. They're in a class of people who can generate money just by being them. So Roger Ver, if he was really struggling for cash, he could, I'm not saying this would be ethical, but I'm just giving it as an example. He could say to some shitcoin, because he'd be getting offered by shitcoin projects all the time, being like, if you've got a reputation within the crypto space, if you promote our coin, we'll give you $100,000 or something like that. Easy. He'd be being offered minimum that much. So he could literally, if he was really that hard up for money where he's about to be on the street, he could just be like, okay, I know this is a shitcoin. I know it's unethical, but I need the money. I need to eat.
They were talking more about the
$100,000,
market,
and he would just be able to make money, like literally just by being him. So
all those guys are rich as fuck too. So they were just talking about like what kind of impact that would probably have on the market is what they were worried about more than like they don't care that he's wrecked. They don't think that he's actually wrecked. They just think, hold on, let's sneeze. Piece of crap. I gotta sneeze, but I can't. Give me a sec.
you know, we won't ever have to go through that of where our like founder or our team lead or our like let's just call him a thought leader, so we're disassociating him from anything to do with the project that could be then seen later by the SEC as any nonsense bullshit. So, but the fact that we look up to Richard as a thought leader in and outside of the crypto space, we know that if he follows what he promotes and we know he believes what he says, we won't ever have to go through that annoying shit of having our founder looking like a total idiot and being totally wrecked and being way less rich than what he was and looking like a wrecked pleb on a relative scale. That will never happen to us.
Yeah, Richard will never let himself be right.
He'll never let himself get poorer than where he is at now. He's going to keep leveling up.
He would sell the diamond and then make another move before anything else.
Yeah. And notice how he has invested in like real world shit. If he was ever hard up for cash, he just sells a rollie. Like he's effectively financially invincible now. We're never going to.
He's surpassed.
And these other guys should have too. These other guys had enough money to have protected themselves financially. Then they just end up trying to like flee countries and
they all give their keys away.
It's insane. It's insane to me that they don't. I guess you know what? They drink their own Kool-Aid. They drink their own Kool-Aid. They believe their own bullshit, and they're like, this is actually a legitimate thing. I'm gonna get so rich. Let's go all in on this like crypto. They drink their own Kool-Aid and then they get wrecked.
No, absolutely, they got wrecked. Guys, Hex is amazing. Richard, thanks for representing the squad today with like 4,000 people. He gained like 1,000 followers in like 2 hours, so that was legit. And guys, every single day, live at 11 a.m. Eastern. I might be doing some different stuff. I downloaded Restream and got that all set up today, so we'll be seeing about making some upgrades around here, guys. Bring Orca back. Let's get that pumping.
Sorry. Yeah. I spoke over the top of him coming into the chat. Is he gone?
Was he in the chat?
I mean, here. Like I saw him pop up like that.
He's gone here. He's gone.
Was he in the chat for a second? I missed him. Anyway, guys, smash that like button if you don't mind. We got like 130 likes. Let's get out of here, guys. DeFi proof, 2 minutes and 2 seconds, guys. Boom, boom.
Thanks for having me on, man.
Young folks, you tripping on them motherfucker. Richard Hart. Richard Hart. Bought my Hex from the fucking start. .1 every day we mark. Bought my Hex from the fucking start. Sacrificing all this bread like I'm Richard Hart. Got paid on big payday and I had a hit restart. Now I'm checking on my pulse just to check my heart. Bought my Hex from the fucking start. Sacrificing all this bread like I'm Richard Hart. Got paid on big payday and I had a hit restart. Now I'm checking on my pulse just to check my heart. Checking my MetaMask moving. Look at the Hex, he is mooning. Looking at wives they be choosing. Peter is why they be losing. Pull chains out and they'll get me a check. He's gas up and got me a mess. Remember the times he died collect. Hex I been eating, I'm dying in the best. Getting this back like a year ago. Getting this post, I ain't letting go. Swerving the ring like a Lambo. Getting this back like a year ago. Getting this post, I ain't letting go. Swerving the ring like a Lambo. Bought my Hex from the fucking start. Sacrificing all this bread like I'm Richard Hart. Got paid on big payday and I had a hit restart. Now I'm checking on my pulse to check my heart. Bought my Hex from the fucking start. Sacrificing all this bread like I'm Richard Hart. Got paid on big payday and I had a hit restart. Now I'm checking on my pulse just to check my heart. Richard Hart.